Welcome to the European market open, everyone. A minute to go into the start of cash equity trading on Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Variant concern. A new strain identified in southern Africa sparks flight bans and warnings from scientists. Investors flock to safety. Risk assets plunge. Bond yields slump. And European futures point to a sell-off at the open. And Black Friday is here. But will supply chain snags and price concerns mean this year's deals fail to impress?
So, Tom, let's look at the futures. I have to say it's a bloodbath out there. It's an ugly, ugly day when you look at the sell-off. Look at that. The European stocks 50 down some 3.4%. Again, you see a clear move. Everything sold off, all the risk assets, and move into havens. Investors dump a lot of these assets. Of course, they're concerned about this new variant that could put it on a different path when it comes to the economy. But again, we know so little about the variant. It's unclear exactly, for example, why Italian bond yields are moving on the back of it.
That is the one and only story that markets focused on right now. And as you say, the WHO coming out saying, look, it may take 1 to 2 weeks to get more details on what this variant means. But for the moment, a significant and singular risk-off mood within the markets then. You can see this playing out as the equity session gets underway here in Europe. The FTSE 100 is down at 2.3%. The Spanish IBEX falling 3.4%. Losses of almost 300 points over in Spain. As they continue to open up these markets, we will read across just how deep this sell-off is going and a shift into safe havens. We've seen this across the treasury markets as well, buying in to treasury bonds in Australia, in the US as well, yields coming off markedly, and we can look at the cross-asset board to see how that is playing out for commodities as well. And in the currency space, it's not the dollar that's the safe haven of choice, it is the Japanese yen, gains of almost 1%. The futures stateside pointing to losses of 1.7%, 80-point drop for the US futures as traders get back to their desks after the Thanksgiving holiday. The US 10-year now at 152, a drop in terms of basis points of 10 basis points on your benchmark US Treasury. Brent is down 4.2%, 4.3%. It wasn't the reserves and the release of reserves that did this. It was that concern about the new variant emanating from Southern Africa at $78 a barrel. Gold is bid as well. In terms of safe havens, the yellow metal has been lackluster in the last few months, but now it's above $1,800 a barrel. That is a state of play as these markets get realigned to this new risk and this new variant.
Yeah, so it's very clear, Tom, that if you look at haven bids, it's yen. There's nothing in the equity space that's being bought right now, apart maybe from a tiny bit in healthcare. A lot of the focus is, of course, on airline and other travel stocks across the board. They're by far the biggest decliner, and this is as traders are reacting to the prospect of further flight curbs. Banks also leading the losses, down some 4.5%. Energy and travel down some 3.5%. It's very difficult, actually, to see how much and how long the sell-off continues for, Tom, because we don't know what the variant looks like, we don't know if it's more deadly, and we don't exactly know what that means for monetary policy going forward. So for the moment, there's a huge sell-off, and a reminder, of course, it's very thin volumes because of Thanksgiving the day after, so we're going to see maybe some of the quirkier moves also coming at the forefront. Now, let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. China is said to have asked DD Global to delist from US bourses over security fears. Our sources say tech regulators want the ride-hailers management to take the company off the New York Stock Exchange because of concerns about leaking sensitive data. We're told DD's been ordered to work out precise details for the delisting with privatization or a Hong Kong share float, both under consideration. Bloomberg has learned that private equity giants KKR and CVC Capital Partners are considering teaming up on a bid for Telecom Italia, a move that would help share the financial burden for Europe's biggest ever leveraged buyout. Meanwhile, in a letter to the board ahead of a crucial meeting today, the chief executive of the Italian company has offered to resign to help move along the KKR offer. Daimler's Northeast Asia chief says Chinese demand will be very positive next year, with sales of premium luxury cars remaining high amid generally strong buying interest for models including the Mercedes S-Class, G-Class and Maybach. Mercedes-Benz sales in China slumped 33% in the third quarter due to significant shortages of semiconductors. Amazon is trying to delay the planned takeover of India's future retail by Mukesh Ambani with a fresh legal challenge. Amazon alleges $1.5 billion was diverted away from indebted future retail, including to a company owned by one of its founders. It's written to India's finance minister and regulators demanding an investigation. Future says the allegations are baseless. That's the Bloomberg Business Flash. Tom.
Okay, Laura Wright in London, thank you. A sell-off, significant sell-off, of course, in European equities today with news of this COVID variant. Let's get into how markets are reacting, how concerned investors should be. Joining us now is our markets editor, Christine Aquino, and Bloomberg Intelligence senior pharmaceutical analyst, Sam Fazeli. Let's start on the markets then, and how the repricing is shaping up across equities, commodities, and FX. What are the takeaways from you? How sustained do you expect this sell-off to be in the repositioning into safe havens?
Well, Tom, you know, the mantra of markets this morning is sell first and ask questions later. And we're really seeing that all across the asset classes, particularly in emerging markets, right? Because this particular asset class has really been battered this week by various things: geopolitical risk, risks related to central banks when it comes to Turkey and Mexico. And this was really the last thing that emerging market currencies needed for this week. And we've seen that particular index for the emerging market currencies erasing finally its gains for the year. It's now set for its first decline in 3 years.
Christina, I mean, I like the fact that you said, you know, sell first, ask questions later, because we have our Sam Fazeli, and I have like 1,000,001 questions that we need to ask to try and understand exactly what we're dealing with. Sam, first of all, when did we first learn about the variant? When did scientists first learn about the variant, and how long does it take to understand exactly what we're dealing with? Is it more deadly? Does it spread easier?
Good morning, Francine. I think I started seeing references to this super mutated variant of the virus about 3 or 4 days ago. There is a site into which these sequences are loaded, and you find lots of, I mean, there's thousands of these mutated viruses everywhere. But then when they start forming a cluster, that's when you start worrying, and that really kind of really got going a couple of days ago. And of course, it will take at least a week or two to just simply know whether this virus is more resistant to the immunity induced by vaccines or a prior infection. And that's what I'm hoping to see. And in the next few days, we'll hear more data out of South Africa about how widespread this virus has become, which will tell us about its transmissibility.
Yeah, and for now, Sam, governments are acting from the UK to Israel to Singapore, Taiwan, most recently lines crossing from Italy and Germany, curbing travel from South Africa and the nations that surround that country. We're seeing now the Stoxx 600 Travel and Leisure Index slumping 6.6%. What do you make of the government actions? Do you expect them to be effective to hold back this new variant, at least for a period of time?
I think exactly as you just said, it's for a period of time. It's very possible that the variant has already got out, because there's the expectation that by the time the South African authorities, and I have to say they've reacted really fast, I can't imagine anyone acting faster than this, come to understand this virus has probably traveled out. We already know there was a case in Hong Kong from a traveler. So, but by closing the doors, you do prevent a more rapid inflow, and I think that hopefully will give countries time to figure out what to do about protecting their populations.
Christina Aquino, we're looking at IAG. I mean, it's down some 20%, which is actually quite an incredible move. You know, volumes are very thin, so the timing actually couldn't be worse because a lot of traders are off because of Thanksgiving. So does that kind of really reflect the kind of anxiousness in the markets?
Absolutely, Francine. You know, I think it's kind of the perfect storm of volumes being really thin, and then you get this big risk-off lurch in markets. I think it'll be interesting to see the open on Monday and see whether this continues, because that's really when we'll see see a lot of the U.S. traders back in full force and really digesting all this news. And definitely worth keeping an eye out as well on what this does to rate hike expectations moving forward. We're already seeing expectations for the Bank of England for December, for instance, being paired this morning. It'll be interesting to see if all of those expectations for the Fed, the ECB already getting priced out or pushed further out into the future.
Yeah, Christine, the adjustment from central banks. I mean, Goldman Sachs, before these headlines hit, were looking at a doubling of the taper and then potentially a rate hike in June. And so whether or not central banks have to re-quantify the impacts of this new variant is going to be central, surely, going forward to how these equity markets play out.
Absolutely, Tom, and I think this is what investors will be watching out for, is the reaction function from central banks, because they're already expecting them to do something about inflation. This is another risk factor on central banks' playbook, and it'll be interesting to see what their response is going to be for this and how markets are going to be reacting to that.
Sam, I was trying to rejig my memory because I'm not a virologist, but there have been instances in the past where we thought that there was a very dangerous variant, and then it was less, dangerous than we actually thought. So, like, what's your feeling right now? I know you're not, looking at the markets day in, day out, but there's panic on the markets. Is it right to panic, or do we just need to wait for scientists to tell us what the hell's going on?
Oh, Francine, I've got my launchpad here with all corners of the market showing up here, and I can see the kind of sell-off that Aquino was talking about. So Christine was talking about. Sorry, I think the issue with the other variants that we've seen so far is that you always got these turning up, and they look like they're more evasive of the immune system, etc. But it's what's been dominating our year and a half has been more transmissible viruses, those that can spread faster, which just displace the ones that can evade the immune system. Here, it is possible, has to be proven, that we have a virus that's not only able to evade the immune system as good as mu and beta, those are my two reference points, but it's also potentially as transmissible as delta, if not more, maybe less. But let's hope, there is a tiny amount of hope that all these mutations may mean that it's less virulent in terms of the disease it causes. I don't want to latch onto that hope. Time will tell.
Sam, there had been a lot of hope in the treatments that were coming down the pipe in 2022 from some of the drug makers. How do you think those companies are going to be reacting to what they're seeing and potentially lining up new treatments or even adjusting their vaccines?
Yeah, from the treatments side, you can't adjust the treatment that quickly if it doesn't work against this variant. But they will be very able to tell quite quickly how it responds in terms of the antivirals pill from Pfizer and Merck. As far as vaccines, I'd like to see data first, but I suspect that they'll all be scrambling to put the new sequence into their mRNA vaccines or their adenovirus backbones to try and see whether they can induce a better immune response to this variant.
Christine, when you look at the stabilization of this, is there a haven that you're looking out for to make to kind of quieten things down? Again, some of the stuff that we've seen, I know we spent a lot of time looking at Italian bond yields, very counterintuitive of why they'd be a safe haven in this kind of environment.
Yeah, I think the move that we're seeing in European bonds is very much being led by what we're seeing in treasuries, because that's the overwhelming force in markets at the moment. But yeah, when it comes to havens, I think it really is showing at the moment where markets are really believing which ones will offer them shelter, right? The yen in particular has been a very prominent haven in this bout of sell-off at the moment, and you can understand why, because it's kind of this currency that still is exposed to still very, very low interest rates, whereas the dollar at a time earlier this year was the preferred haven, but now we're talking about other dynamics in play for that, particularly strength in the U.S. economy and the prospect as well of Fed tapering and potential rate hikes down the future. And so when it comes to kind of a battle of havens, the yen is winning today as far as investors being preferring that as a shelter in this bout of sell-off.
Sam, we're all trying to assess whether or not this is an overplay by the markets, whether there's there's too much concern about what's going on, or whether in fact the markets have been overly sanguine. There's some commentators who said, look, we've got a playbook for this, whether it's the treatments, the vaccines, the lockdowns, the restrictions. Does that playbook, should that give us some reassurance?
Yeah, I mean, Tom, we've got a virus here that we've learned to live with to a degree, and I think there are all the armamentarium of attacks that we have here are really able to come in here. The issue would be if it's really seriously able to evade the immune response, and if that's the case, we will need to think about another shot of a vaccine, potentially representing this variant. And because remember, then we end up also potentially losing our monoclonal antibodies that are critical to reducing death rates in quite a lot of, and hospitalizations in immunocompromised people. If we lose those, it is a setback, and we have to then reassess what we've got. But we've got the pills, and let's hope they continue to work.
All right, thank you both, of course, for joining us. We're seeing this post-Thanksgiving sell-off accelerating, spreading across global stock markets, U.S. indices, futures also down amid these fears that, this new variant identified in South Africa may spark fresh outbreaks. And then I have a viewer that I have to thank saying, look, if you look at BTPs, it's actually yields are lower, but actually the spread to bonds is wider. Coming up next, we'll have much more on the markets and the fallout from this variant. A little later, we'll also be speaking to the South Africa Minister for Public Enterprise, Gordon. It'll be interesting to get his take on all of this. That's at 9:30 UK time, and this is Bloomberg.
Don't we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think will end up being on the right side of history as well.
Welcome back to the Open. We're about 17 minutes into the European trading day. These markets are actually not getting better. They're accelerating some of the declines, with the CAC 40 down some 4.1%. The DAX, the FTSE, and overall the European Stock 600 down between 3.2 and 3.5%. Again, researchers, let's remind ourselves of this. Researchers have really yet to determine exactly what this new variant is, whether it's more transmissible or more lethal than the previous ones. But the markets are, I guess, selling off now and then asking questions later. So you see a lot of asset classes, all asset classes, the risk assets being dumped and investors flocking to havens today. So let's check in also on some of the stocks that are moving at the open. Lizzie Burden joins us now with the very latest. I imagine, Lizzie, the first thing we should be watching out for is travel and leisure.
Exactly, because it's all about this new variant discovered in South Africa, Francine. The biggest loser on the stock 600 so far is IAG, the British Airways owner, and that's because the long-haul carriers are being the hardest hit from the news that the UK's temporarily banned flights from South Africa and 5 neighbouring countries. But this will have ripple effects as well for the low-cost carriers like EasyJet, Ryanair, and then for the wider space, you've got the hoteliers, the travel hub retailers, and the airport operators. On the flip side, though, you've got the winners from this news. Deliveroo, the British food delivery company, has typically done well when people have been locked down at home, and so far it's in the green. As well, you've got its rivals like Just Eat and meal box company HelloFresh, and then think about the computer equipment providers like Logitech, with people working from home more. They're set to be doing well today. And finally, we come to Telecom Italia, Italy's biggest phone company. The CEO has offered his resignation to help move along a takeover bid from KKR, the US buyout fund. It's in the green so far because investors will be hoping that it can get this deal over the line. Bloomberg hearing that KKR may even up its offer to get it done. Francine.
Okay, Lizzie Burden there looking at the stocks to watch on a turbulent day for the markets. The shift to havens is pronounced within the Treasury markets, and you can see yields sharply lower. Let's check in on the bond markets then across the US, UK space and the Eurozone as well, as investors start to pile back into Treasuries amid this search for havens. You're seeing it pronounced as well in terms of the Japanese yen that's gaining gold as well. Your US 10-year is now at, what, 152? There has 151 in fact, 12 basis point move lower in terms of the US 10-year. The US 2-year is 11 basis points lower, that yield as well. That's your UK gilt gaining at 0.848. The yields, of course, lower by 12 basis points for the 10-year in the UK. And the German Bund is bid as well. That is the ripple across the Treasury markets and fixed income as markets readjust to these risks around this new variant. Let's get more now with Althea Spinozzi, fixed income strategist at Saxo Bank. Althea, thank you for joining us this Friday morning. What do you make of the market moves, and are things overdone? How far did this sell-off go, do you think?
Well, I think that the sell-off went quite far because we are watching at a very illiquid market at the moment on the back of the Thanksgiving holidays. However, the rally that we are witnessing to might be short-lived for the simple reason that this is not the first COVID, this new strain wave that we are seeing. So the market knows that this is going to be temporary. And on the second end, if there are new lockdowns, that means that supply chain bottlenecks will become worse and will apply even more inflationary pressure to the economy. So at the end of the day, we are going to see central banks remaining hawkish and going forward with their tapering agenda and hiking interest rates. And Tom, just to highlight the hawkish agenda of central banks, this morning the Commonwealth Bank of Australia hiked mortgage rates despite news hit the market of the new strain.
So, Althea, you seem to suggest that actually the sell-off has definitely been overdone, and that's because it's the day after Thanksgiving, very thin trading volumes. But is that because you think that no matter how virulent or how deadly this virus could be, we're better at dealing with it? Or you actually think that it's been overdone because it stays within, even if it's a variant, it could stay similar to what we've seen?
Well, I believe that it's overdone because right now in the market, at least among central banks, the big topic is inflation. And if there are new lockdowns, well, inflationary pressures can definitely get worse, especially in terms of bottlenecks and in terms of inflation to stick around for longer rather than being permanent. But we will have a better picture on Monday when liquidity is back on the market and how traders are going to position ahead of the December FOMC meeting.
I think we've got a chart that shows the credit default risk and the pile into credit defaults on the back of some concerns about rising defaults potentially across the corporate space here in Europe. What is the extent of concern there? Is there a default risk more broadly as COVID-19, the restrictions become more pronounced?
Definitely, if lockdowns and especially travel restriction continue, that's becoming a real risk. But it's very likely that what we see is a spike on the back of the news. We recently seen high yield bonds falling on the back of expectations of higher yields. But when we look at spreads, they are still around pre-2008 global financial crisis. So basically, it indicates that there is not yet that deterioration that would cause a widespread sell-off in credit markets.
Thank you so much for joining us. Saxo Bank fixed income strategist there, Altia Spinozzi. Now, coming up, we'll have much more on the markets and the fallout, of course, from this variant. A little bit later, we also speak to the South African Minister for Public Enterprise. Don't miss that conversation. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. We are 26 minutes into the European trading day. The heavy selling continues. The Stocks Europe 600 down 3.5%. The CAC 40 at its lowest since October of 2020. At the bottom of the list on a sector basis, travel and leisure. No big surprise there given the constraints, the curves being put in place. The US futures extending their losses now down 2%. Coming up, we will be talking Black Friday and how the new variant may affect retail sales. Stay with us. This is Bloomberg.
1 year ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the Open, everyone. 30 minutes into European trading day, and here are your top stories. Variant concern: a new strain identified in southern Africa sparks flight bans and warnings from scientists. In the red, European stocks sell off, with the travel and leisure sector slumping at the open. And Black Friday is here, but will supply chain snags and price concerns actually mean that this year's deals fail to impress? Tom, if you look at the markets, good morning again. I mean, it's a very clear move onto havens, and actually it's the risky assets that are getting dumped quite severely.
Yeah, and two key caveats that you've been highlighting, and rightly so, which is liquidity in the markets given the Thanksgiving holiday, but also the fact that we don't know very much about this new variant. And the WHO is saying it's going to be 1 to 2 weeks before we know just how dangerous this new variant is. We know that it has more mutations than previous variants. Sam Fazeli from BI has been illustrating that for us, but we do need more details. But for the moment, it is selling heavily on the back of this news around the variant that has emanated from southern Africa, and the movements and the actions from governments around the world to restrict and curb flights. The Stocks Europe 600 down 3%, more than 3%. The DAX has lost 500 points in similar territory, down 3%. The CAC 40 is the lowest in terms of the major indexes here in Europe, down almost 4%, losing 280 points. It's the lowest level for the CAC 40 since October of 2020. And the FTSE 100 is lower by 3% as well. Let's change it on and see how things are being reflected sector by sector. Every single sector is in the red. We're going to look at crude as well. This is worth highlighting what's happening, of course, in the energy space. Markets look past that release of supplies and reserves from the US and others, but this is hitting the crude and WTI picture very heavily indeed. Brent is down 4.6% and WTI down almost 6%. What is this going to mean for OPEC Plus as they weigh up their next steps? Let's check in then on the sectors. As I said, every single sector in the red. Travel and leisure right down at the bottom, firmly lower. IAG, the last time I looked, was down more than 20%. You're seeing losses of 6% across travel and leisure. The UK, Germany, Italy, Singapore, Israel, and others putting in place curbs around travel and flights from southern Africa. Least losses you're seeing in places like healthcare at the moment, but every single sector is in the red. The flight to safety as well, taking investors to the yen, which is gaining, gold, and the Swissy. That is the shape of play. 30 minutes into your trading session, Fran.
Yeah, it's ugly out there, Tom. It's really ugly today on this Friday, the day after Thanksgiving. Now, the last thing retailers would have wanted on Black Friday, of course, talk about new variant. But while this fresh twist in the pandemic only hit headlines yesterday, and no cases have been recorded in the US or Europe, it may provoke fresh concerns among consumers thinking of hitting stores today. Well, joining us now to discuss all of this is the head of consumer goods at PwC, Lisa Hooker. Lisa, great to have you on the program. I mean, do people actually not go in store and buy more online, or do they actually worry about their purse because of the variant, or is it just travel and leisure that will be hit?
It's really interesting because at the moment, and particularly in the UK and Europe, Black Friday is very much an online story, with actually only 20% of purchases in store and 80% online. And I know in America it's more like 45% in store. So I'm not sure the recent news will really impact the short term and impact Black Friday, because people are really keen to spend more this year and get ahead of the game in terms of worries about things like shortages, but also because they've saved money over the pandemic.
Lisa, what are PwC's forecasts for how much is going to be spent over the holiday season?
Well, we believe, asking consumers, they're going to spend about 8.7 billion, which is up from 7.8 billion in 2019. At that time, we started to see a little bit of waning of interest in Black Friday, and about 50% were interested and 50% weren't. This year, we've seen 60% interested and a clear indication that people expect to spend more.
Lisa, what are people buying? I have to say, I'm kicking myself, Tom, because I started my Christmas shopping very early, forgot about Black Friday, and then I go online and I see the things that I bought like 2 weeks ago, 20% off, and it's like, you know, a terrible feeling. Are people just getting ahead of purchases that they would have done anyway, Lisa, or are they just spending more?
People know there's certain times of the year to buy stuff, and Black Friday is a really interesting one. It's very much about electricals and fashion, and it's mainly about buying for yourself rather than buying for other people, particularly men, who the UK survey indicates spend 60% more than women do, but generally it's on things that they want and they've researched.
Are consumers here, are they concerned about inflation? Are they concerned about price pressures? Is that going to have any impact in terms of the sales numbers that we're going to be seeing?
We find there's a real correlation between confidence and spending. And at the moment, confidence dipped a bit in September, but actually is still very strong. So I don't think inflation is going to have a significant short-term impact, although we've still got some of it to come through, and I think we will see our grocery shopping go up. The nervousness about inflation is really going into next year, and will it dent consumer confidence and people's ability to spend? The only good thing is we're seeing, actually, when we came off furlough, we've seen employment hold up well, and we've also seen a reasonable amount of labour inflation, so that should help to mitigate a little bit.
Lisa, give us a sense of actually what we should be watching out for in the future. So there was a lot of stock buildup because of the pandemic, and I think a lot of retailers had to readjust. Do they now have less stock, or how are they affected by the supply chain? And so how difficult will it be to have a lot more sales post-Christmas?
I think actually we're starting to see a tiny bit of an indication that supply chain is starting to move a bit better. It's early days. We do expect some level of disruption through 2022. But what we found actually is retailers have been quite agile at either replacing an item they can't get with something else. So I think there will be a level of stock out, but it's not going to be that severe. The areas we're just going to have to watch out on is the must-have gifts, I think, will go very quickly. So actually shopping early is not all bad. But there are some, I think, parts of electricals and bicycles where there's some parts you can't get. So there will be a little bit of areas where there'll be a shortage of supply. But I actually think things will improve as we get through 2022.
Lisa, you talked about online, offline earlier, the 80-20 split, 80% online, 20% offline, and how that diverges from what you see in the US. Are we at kind of peak online here in the UK, or is there more to go?
Well, you saw that massive jump to over 30% through the pandemic, and then it's come down to the late 20s. We will grow from there. We're not going to go back to the pre-pandemic levels and grow from that level. So we're at 26, 27% at the moment, and we'll see that continued growth over the next 10, 20 years. So it's not going away as a phenomenon.
Lisa, thank you so much. Lisa Hooker there, Head of Consumer Goods at PwC. Now let's get straight to the Bloomberg First Word News with Laura Wright. Hi, Laura.
Hi, Francine. A new COVID-19 variant first discovered in southern Africa is raising fears about mutations, with the UK adding 6 African countries to its travel red list from midday today. Germany is also restricting travel to and from South Africa. Scientists have described the strain as very different to previous incarnations and of serious concern. Sticking with Germany, new government plans to channel 60 billion euros to help finance its climate goals over the next 4 years. Bloomberg understands the money will be earmarked via a supplementary budget from existing outlays. Olaf Scholz's new administration has made a headline pledge to zero out carbon emissions by 2045 and to end coal use by 2030. France's leading union of fishermen says it will block access to and from 3 ports as well as to the Eurotunnel today to step up pressure on the UK over post-Brexit fishing licenses. The protest will start with a 1-hour blockade of a port in the morning, with access to the Eurotunnel blocked from 2 to 4 p.m. The UK is urging the French authorities to ensure there are no illegal actions and trade is not affected. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Tom Francine.
Lola Wright here in London. Thank you. Coming up, rising food inflation hits record highs and will impact low-income families this winter season. We'll discuss that with our next guest. This is Bloomberg.
Extra $1 trillion in spending, not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. You know, I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City.
Here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Welcome back to the Open, everyone. 41 minutes into the European trading day, and actually it's not getting any easier out there. You can see the CAC 40, the DAX, and also the FTSE down between 3 and 3.9%. It's very clear that investors still dumping some of the risky assets, flocking to havens on this Friday on concern about this new variant. Now, a number of caveats to that. First of all, we're seeing very thin volumes, so there's not much liquidity. It's the day after Thanksgiving, so we could see some of the moves exacerbated. However, and I just received this note by Mizuho International, which is wonderful. Thank you, Peter Chapwell, for sending it through. And he's talking, Tom, about the fact that actually because sequencing hasn't been, as, I guess, mandatory or well in certain countries, it could be much more widespread than we think. And this is why maybe there's a little bit more worry than anticipated in the markets.
And within what we've heard from South African officials is that 90% of new cases within that Johannesburg area are this new variant. But as Sam Fazeli from Bloomberg Intelligence has been saying, it is the number of mutations that is concerning. But the jury is still out as to how much of a risk this variant actually poses.
Yeah, because, I mean, we've been doing our homework, and certainly we have a great quick take piece saying, like, what we know and what we don't know about the variant, and researchers really have yet to determine whether this variant, which we understand will be called new, another Greek letter, is more transmissible or lethal than the previous one. So those are some of the questions that we need to get the bottom of, but that would take 2 or 3 weeks from where we are now.
And for the moment, MLive are saying this is a question of investors selling and then asking questions later, and you're seeing that across the equity space. And then havens, your FX haven of choice, by the way, is very much the yen, up at 1.2%. Cryptocurrencies proving once again they are not a hedge in these environments. Crypto and Bitcoin is down. Bitcoin is down 20% from its November peak. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. China is said to have asked DD Global to delist from US bourses over security fears. Our sources say tech regulators want the ride-hailers management to take the company off the New York Stock Exchange because of concerns about leaking sensitive data. We're told DD's been ordered to work out precise details for the delisting, with privatization or a Hong Kong share float both under consideration. Bloomberg has learned that private equity giants KKR and CVC Capital Partners are considering teaming up on a bid for Telecom Italia, a move that would help share the financial burden for Europe's biggest ever leveraged buyout. Meanwhile, in a letter to the board ahead of the crucial meeting later today, the chief executive of the Italian company has offered to resign to help move along the KKR offer. Daimler's Northeast Asia chief says Chinese demand will be very positive next year, with sales of premium luxury cars remaining high amid generally strong buying interest for models including the Mercedes S-Class, G-Class and Maybach. Mercedes-Benz sales in China slumped 33% in the third quarter due to significant shortages of semiconductors. Amazon is trying to delay the planned takeover of India's Future Retail by Mukesh Ambani with a fresh legal challenge. Amazon alleges $1.5 billion was diverted away from the indebted Future Retail, including to a company owned by one of its founders. It's written to India's finance minister and regulators demanding an investigation. Future says the allegations are baseless. That's the Bloomberg Business Flash. Francine.
Laura, thanks so much. Laura Wright in London. Now, the countdown to Christmas has begun. The impact of rising inflation on food prices will have a disproportionate impact on lower-income families. Now, joining us now is Fiona Boll, Global Head of Commodities and Real Assets at S&P Dow Jones Indices. So, Fiona, thank you for joining us. When you look at some of the things that we're looking at, of course, it's the impact on some of the lower-income families, which is something that, you know, politicians around the world really need to address and readdress. But it's food inflation in the UK. It filters into central banks. What can they do and not? When you look at the new variant, does it just exacerbate some of the problems that we already have?
Food inflation is already a massive problem. As you say, more of a problem in countries like the US and the UK as opposed to some of the Asian countries, which is an interesting phenomena. But I think something like the new variant, we'd always thought that we could see this happen, and it'll be really fascinating to see how that impacts more likely energy prices first, but likely flow through to food prices as well.
And we know that there's that link between, of course, energy prices, fertilizer, and then how that plays into the food commodity space. What is the divergence, and how much divergence is there within the food commodity space at this point?
There's enormous divergence in terms of performance. You look at something like coffee, which we all need to have at this time in the morning. The S&P GSCI Coffee Index up 77% year to date. And that's to do with bottlenecks in places like Brazil. It's to do with issues around farmers not delivering on contracts. And it's, you know, it's to do with all the things that we're seeing in terms of supply chain issues and higher energy prices. But on the other side, we're seeing some other food commodities that haven't risen quite as high.
Fiona, is this something that's here to stay? So, we're trying to figure out whether in 6, 7, 8 months it gets better because things get readjusted, or whether this is a new normal.
I think it's hard to say. I mean, we know that energy prices can move relatively quickly in both directions. And we've seen oil prices this morning. Sometimes when we're talking about food, it can take quite a while for these higher raw material prices to work through the system. And it also really depends how the food manufacturers react. Will we see them do that old trick of sizeflation where they just reduce the size and keep the cost the same? or will they actually be forced to make some quite significant price rises that you and I will see when we go to the grocery store?
How much of all of this is affecting investment within the food space, agricultural space?
I think it's making those investment decisions more challenging, not having that visibility and really not being able to model out exactly how these price changes will happen. So I think it's making a lot of investment managers, many whom have not invested through periods of high inflation, really have to sort of take a step back and look at a whole number of scenarios.
What I know some of the things that, you know, we're trying to also understand how policymakers can put in place things that basically benefit but also safeguard the ones that have less. What's the impact, for example, on poverty across the world, or what's the impact on food banks? I know it's something that also you've been looking at.
It's really difficult because essentially food inflation acts like a regressive tax on those that already spend a large proportion of their income on food. So, you know, while you and I might be able to look for a cheaper alternative, a lot of these consumers are already buying the cheapest alternative, and they don't have the means to look at other ways to substitute that. So it's really important that there is that safety net, and it's a safety net that's particularly around spikes in prices. And, you know, we've already seen in a lot of cases, you know, wage growth is really increasing, but it's all about whether that wage growth is keeping up with that cost of living.
Yeah, there's two different conversations going on. There's one about the 20% increase in turkey prices in a country like the UK, and then the very, very real detrimental impact of higher food prices in poorer nations as well, and what that means. Fiona Bolt, thank you so much from S&P, breaking down what's happening within the food commodity space and the implications as well going forward for inflation. Coming up, we focus on the travel industry stocks being hit heavily today on concerns about a new variant and those curbs on travel. We'll get more. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. 52 minutes into your European trading day. A stark sell-off, and it continues, down around 3% across the European stocks 600. The CAC 40 is down almost 4%. Sectors obviously being hit: travel and leisure, banks, energy, on the back of very much significantly lower yields across the treasury space. And travel remains in focus, of course, on the back of these curbs. The new emergence of this new coronavirus variant that emanated from out of South Africa is hurting that space, travel and leisure, just as the sector looked like it was catching a break. This is what airline stocks around Europe are looking like right now. Very significant selling, almost 10% lower on IAG, though it's paired the heavier losses that we saw at the start of the session. Air France down 7%, Lufthansa down almost 10%, and Ryanair seeing losses of close to 8% in the session. Joining us now is Bloomberg's EMEA transport industry reporter, Siddharth Philip. Siddharth, what is your reaction to the way that markets are repricing the COVID risk now, as we look ahead to what was going to be, what many would have hoped within the industry, would have been a decent season for the airline industry?
Morning. So for the airline industry, this is a double blow, because we've seen the likes of the airline industry having to face lockdowns across Europe in places like Austria. And now with the South African lockdown and also the travel ban, you've basically got a 1-2 punch for the airline industry. And the airline industry was really hoping to recover from the pandemic. I mean, we're still not out of the woods with Delta. The travel was just beginning to start again. And this has come as a blow just as they were getting restarted.
But Sid, I have to say a 20% move on IAG, the parent company of British Airways, is really pretty punchy. What are the airlines saying? Are they expecting, I mean, is this worst case scenario? Are we pricing the worst and hoping for the best?
So I think it is a case of that, because the airline industry is so far saying that it's restricted to South Africa and it's not really a wider travel ban across the world. But the worry, I think, for the airline industry is the fact that these kind of things change very quickly, and a localized ban sort of morphs into a larger, wider travel ban. And before you know it, travel restrictions come back. And that is really the major concern for the airline industry at the moment.
What are we hearing from, have we heard anything from the airline companies, from executives?
So we've heard from British Airways. They said that they can't really do anything about South Africa at the moment. They're working with the customers. And so far, they've been positive. But we have seen Michael O'Leary talking about the travel restrictions earlier this week. And he said that it will impact sentiment as we go forward, especially as the winter season, which is typically the peak season for travel outside the summer, really gets going. And it also have a knock-on effect on bookings for next summer, because typically people tend to book summer holidays in the last week of December, early January.
All right, Sid, thanks so much. Siddharth Philip there, our expert when it comes to travel and leisure here in Europe. Investors, Tom, definitely dumping some of the risky assets, flocking some of the safe havens. But again, it's good to keep in mind the fact that, first of all, we're thin on volumes. So these moves are definitely bigger maybe than they would have been on a day that's not the day after Thanksgiving. And then we actually don't know what exactly we're dealing with, right? So if you speak to researchers, they say, look, it's a big variant because there are a lot of mutations. We don't know if it spreads more, and we don't know if it's more deadly.
Yeah, important caveat, certainly. When you look across the bond space in the US, you're looking at your 10-year at 153, the 5-year at 122. You're seeing a 12 basis point move lower in terms of the 5-year yield, and your 2-year seeing 9 basis points lower. The question then is to what extent this could change the calculus for central banks, for the Fed, with Goldman Sachs coming out saying before all this, before these headlines, they were seeing a rate hike in June and a doubling of the taper.
Yeah, and we also don't know how long it takes to actually have a clearer picture, right, on the path forward and the impact in the economy. So far, we know, and we're talking about it with Sid Philip, the UK and Israel temporarily banning some of these flights from South Africa.
That is it for the European Market Open. Surveillance early edition is up next. You're seeing losses of 2.5% across the European space. US futures lower by more than 1.6%. This is Bloomberg.
common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Nobody knows, how long the temporary effect will be, and what is the long-term evolution of inflation.
From now on, the vaccine booster will be open to all adults aged 18 and over, 5 months after their last injection.
Indication came from our scientist colleagues that indeed they were observing what looked like a new variant.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. A new variant of concern rattles markets. Investors flee to safety over this more transmissible COVID strain. European governments come under pressure. The UK and Germany ban travel to and from southern Africa, where the COVID strain is believed to have emerged. And stay with Bloomberg Surveillance Early Edition. This hour, we speak to the South African Minister for Public Enterprise, Pravin Gordhan. Send in your questions on IB Plus TV Go. Now, first thing is first, and I have to say it's pretty much a bloodbath across the markets. There's a very clear move away from some of the risky assets, investors dumping those, flocking into havens. And you can see the European stock 600 down some 2.4%. Travel and leisure getting the brunt of it. I mean, we had a great roundup from Sid Phillip looking at some of the stocks that are the most under pressure. For example, IAG, the parent company of British Airways, was down 20%. It's now only losing 9%. Still a pretty big move, as we don't exactly know what we're dealing with. Now, look, if you look at fears of the variant, they first were discovered in South Africa. They may spread internationally, and we're a little bit in a wait-and-see situation. So first, the markets, very thin volumes, so some of these moves are maybe bigger than expected. Look at crude oil, down some 5.7%. We don't exactly know what we're dealing with. A lot of researchers are saying, well, look, it's of interest. It's worse than what we have, without actually being able to explain what that means, whether it's more lethal or whether it spreads quicker. You can see the FTSE down some 3%, the CAC 43.5 lower. This is something that means that after the record highs we have for the stocks, it's actually the biggest sell-off since we had of November 2020. Now, the COVID variant, a new dramatically different strain, we understand. Scientists, though, still working out if it's more transmissible or more deadly than the previous ones. This is what the South African health minister had to say.
Initially, it looked like, it was just some cluster outbreaks, maybe gatherings and so on. Some of these were attributed also to some university campuses like TUT area in the Tshwane metro. But from yesterday, indication came from our scientist colleagues from the Network for Genomic Surveillance, so that indeed they were observing what looked like a new variant.
We're here to discuss the bloodbath on the markets. Janet Moy, Investment Director at Brewer & Dolphin, Bloomberg Intelligence Senior Pharmaceutical Analyst, also Sam Fazeli. Janet, thank you so much for coming on. Sam, we'll get to you in a second with the hard questions on virology. But is it a case, Janet, of sell now and ask questions later? Why are we seeing such big moves in the markets?
Thanks for having me. I think, first of all, the U.S. market was closed, and then there has been very thin liquidity. I think that really exacerbated the degree of the sell-off. And, of course, the situation is very uncertain here. We don't know how deadly is the virus, how contagious it is, and how resilient the vaccine can be to this strain of variant. So I think there is a lot of uncertainty. And I think, given the market rally, I think it makes sense for some of those investors to just take some profits and take some risks off the table.
Yeah, Sam, so what do we know? I mean, when do we know actually what we're dealing with in terms of, what researchers can tell us? Do we find out looking at the cases for hospitalizations in South Africa, or is there another way of telling how deadly and how spreadable this is?
Yeah, there's really no other way, Francine. You have to wait and see. I think South Africa will be able to tell us after the phenomenal work they've done already on the genomic analysis and the speed with which they've responded. I think we really have to congratulate them on that. They will know very quickly whether this is a very rapidly spreading virus. We have to watch out for factors such as founder effect, which are very too esoteric to discuss here. But it looks like that it could be more transmissible, or at least as transmissible as the Delta variant. And then the next question is it more troublesome? That will take a bit longer because it takes longer for hospitalizations to result after an infection.
Simon, we're trying to understand, some of the moves in the markets and whether that's matched actually with some of the concerns that we're seeing out there with what virologists are telling us. Sam, when's the last time we had I don't know whether you call it a false scare, but, a variant that could have been worse than expected that actually, was more mild than we thought at first?
Yeah, I don't think we've had anything really. I mean, Delta and Alpha were the ones that really changed things. And the market's reacting to the strength of the phrases and the words that the scientists are using in referring to this variant. We had Mu, we had Gamma, we had Beta, we've had Epsilon, we've had Kappa, but none of them really had any characteristic or rapid spread that led people to worry about it. And you have these 32 mutations. It's just laden with mutations. What I want to do, Francine, is to latch onto a very tiny hope, and that might be wishful thinking, that with these mutations, it's actually become less troublesome in terms of the severity of disease it causes. There's no reason to think that, but we always hope that when a new variant comes along, it would be a little less, have less morbidity.
So, Janet, I'm sure a lot of the traders are actually calling their virologists or their experts to try and figure out exactly what we're dealing with. We have a great story on the Bloomberg terminal that says what we know about the new virus variant that's rocking the markets. And frankly, in a nutshell, it's not much. So, Janet, when you look at, I don't know whether it's game theory, but if you model what this could be and what it happens, I mean, worst case scenarios that we go back into lockdowns and so it changes the trajectory of the Fed, or what exactly is the market pricing in today?
Yeah, so I think before this breaking news, I think the markets have been pricing in much more hawkish Fed and, of course, the Bank of England as well. And I think if we do, there's a lot of uncertainty. If we do see this virus persisting and being more deadly and there's more concern, I think central banks will have to slow down their potential rate hikes or QE tapering. So I think markets would definitely revise down their hawkish expectations.
But that would be supportive of the market. So what are they looking at today?
Yeah, so I guess it is really the uncertainty. It is the initial knee-jerk reaction to this breaking news. We really don't know what is going to happen because I think it takes time for the virologists to figure out the exact the dynamics of this virus. So I think it's really the uncertainty and the thin trading. So I think it's just, and also after a very strong rally. So I believe that, we have been there, we have been through the Delta variant and the markets end up okay. I think if this happens again, I think the authorities will do whatever they can to support the economy and the markets again. And what I really think is positive on this this time is that governments are reacting much more quicker. For example, the UK already banned several countries from the South African region to land in the UK. So I think that's all quite positive. And of course, we have antiviral drugs and we have booster vaccines. So I think this time around we could be more cautiously optimistic.
Yeah. So Sam, a couple of questions on that. First of all, the booster vaccine, again, does it, come back at the forefront of how instead of taking boosters, maybe we should distribute some of the vaccines more equally and equitably across the world? And does it take actually 6 weeks for some of the mRNA vaccines? And could it be the case that actually we have a vaccine that works for this new variant in 6 weeks?
Yeah, so to your first question, absolutely. We've shut our doors to South Africa and some other African region countries. Let's, at least in response, give them vaccines to hopefully get their population vaccinated. But let's not forget that South Africa's already told us that they have enough supply. It's a matter of getting people to roll up their sleeves and getting those vaccines to those people. So perhaps it won't help South Africa, but maybe some of the region and countries around it. But boosters, Francine, I think it's possible that any virus, any of these mutants will still be able to be neutralized by the vaccine antibodies, but if you have, but at a lower level, which means that if you have much higher levels, you'll be better protected potentially. So that's what I think we need to continue to think about and continue the booster process. And I've forgotten your second question, sorry.
Yeah, and the second question actually was just whether the mRNA vaccines can adapt so quickly that we'll have something workable, even if the current vaccines don't work in like 6 weeks.
Yeah, the number that they've given us is 100 days, Francine, that they can create a new vaccine in 100 days, but then it has to be tested. And I think you could do probably the same with the adenoviral vectors, such as Johnson & Johnson and AstraZeneca, maybe a bit longer.
Janet, is the market complacent? It's amazing when you look at, I had conversations with senior bankers in the last 3 or 4 weeks, and we talked about inflation, we talked about geopolitics, we talked about, something unexpected. But actually, it wasn't, like a COVID variant was not at the forefront anymore. Like, is this a human reaction that we've lived through it for 2 years, and so people just want it to go away?
Yeah, I think there's some element to that. I think on a lot of people's top risk, it has been inflation and central bank policy, but COVID is no longer the top risk for many investors. So I think this comes as something quite shocking, and that's why we're seeing this market reaction. So I think right now, we think the areas that are vulnerable would be, obviously the travel, the leisure stocks, the energy areas, which the energy area have done very well, so we're seeing a bit of sell-off there. But I think there could be some potential buying opportunity for quality companies going forwards. For example, quality industrials or staples as we head into a more slowdown phase of the business cycle.
And what about airlines? Airlines and travel, is that it for now, or do you pick them up at some point?
Yeah, I think it is highly uncertain at this stage, and I think I'll be cautious in that area because I think this could potentially linger given the time it takes to analyze the virus and to figure out what happens to the economy. And of course, I think even before this variant, Germany and Austria, they're already facing more stringent restriction, which is already not great for the sector. So I'll be very cautious here and not trying to get in early.
Yeah, all right. Thank you both for a great conversation, trying to figure out exactly what the market is looking at, what's priced in, and what comes next. Janet Moy there from Bruin Dothan, and Bloomberg Intelligence's Sam Fazeli. In the meantime, Didi, our other big story, we haven't talked about it that much because we've been focused so much on the virus. Didi actually dropping 10% in pre-market as China has asked it for delisting. This does seem to be an escalation of exactly what we've been seeing from Didi. China is set to ask Didi to delist from the U.S. on security fears. Unclear how that will happen, who will pay for it, and some of, I guess, the protocols involved. Coming up, the new variant, first discovered in South Africa, leads to a global stock sell-off. A number of travel restrictions against South Africa. So later on in the show, we'll be speaking to the country's Minister for Public Enterprise. He's Pravin Gordhan. Send in your questions on IB Plus TV Go. This is Bloomberg.
front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
We will be suspending flights from 6 southern African countries, and we will add in those countries to the travel red list. Those countries are South Africa, Namibia, Lesotho, Eswatini, and Zimbabwe, and Botswana.
Well, that was the UK Health Secretary, Sajid Javid, announcing a travel ban to and from South African nations in response to a new variant of concern. Now, over in Brussels, the EU Commission President, Ursula von der Leyen, has also said that she will propose a so-called emergency brake to stop travel from southern Africa. This is what the picture looks like for some of the travel markets. Now, we did see a huge sell-off to some of the individual stocks. You can see, for example, IAG was down some 12%, but now they're actually still leading losses, but losing a lot less than they were about an hour ago. You can see IAG down 11%, with Lufthansa down some 10%. Now, the other story we're watching, of course, is Didi. This is after a Bloomberg scoop says that China and Chinese regulators have asked Didi's top executives to devise a plan to delist from U.S. bourses. Now, this is according to a Bloomberg scoop. We spoke to people familiar with the matter, and this is a pretty unprecedented request that's likely to revive fears about Beijing's intentions for its giant tech industry. Pre-market, that stock price, Didi, dropping some 10%. We're back with Janet Moy, Investment Director at Bruin Dolphin. Janet, you're a great student and a great scholar, really, of China and some of the ins and outs of what we're living through. First of all, if this plays out, this is a pretty heavy request to actually ask Didi to delist. So does it mean that China will be much more aggressive with their giant technology companies?
Yes, we think so. I mean, since the sell-off began in Chinese tech, we have been saying that it's probably not over yet. The market is still finding a bottom because we don't see that the regulatory clampdown would ease in the short term. It's going to be quite persistent, and I think today we got further confirmation that it is not ending anytime soon, and in fact, it has been getting more aggressive. And delisting Chinese companies from the U.S. market has been one of the tail risks and concerns that we have for these tech giants, and I think we are seeing a pretty big risk out there at the moment.
Janet, what my fear is actually that we're, that we don't pick up on some of the things that the market is underestimating. Are we underestimating the change which China will go through in the next 12 months? First of all, growth could be stable, but significantly lower to what we're used to, and then we could see a lot more of this regulation coming through.
Yes, absolutely. We have been cautious on China. I mean, despite the sell-off, we haven't been adding, contrary to many other investors who find a lot of value in China. And that's because we think the changes is a regime change, is long-term, and the government is very keen to see the changes happening in the Chinese economy. And of course, what you mentioned about is the slowdown, and it is actually potentially can be quite deep because you're talking about the housing sector, which has direct and indirect links of GDP of 30% of the economy. So while I don't think there will be a meltdown, because after all, is a very important sector, but I think the spillover effect within China could be quite big. And so that's why we're talking about both a cyclical slowdown and I think secular slowdown, because that clampdown could, curb some of those innovation, investment. So I think we remain cautious on the region.
But Jen, so what does it mean for the rest of the world? Again, if you look at the U.S. and other parts of the Western world, can we fare the China slowdown? Are the two regions that decouple or not so much?
Yes, I think if we do see a more severe Chinese slowdown, then of course that could have some marginal negative impact on the global economy, given it is such an important player in the supply chain and in terms of consumption. But we think that it should be relatively contained in the Chinese economy. And in fact, I think, for example, the sell-off in the Chinese stock, actually, some of the flows could be going to the U.S. tech stocks instead, because investors that chase growth, they have to find somewhere to invest. And also, we think that the impact will be more limited because the U.S. is having its infrastructure package, and we are in the developed world, and globally actually we are going to invest a lot in the transition to green energy. So there would be demand for some of those commodities that have been seeing weaker demand from China, for instance. So we think overall it would be relatively contained in China without a very severe impact on the global economy.
The other big story is, of course, oil. Brent down some 5% because of this new variant. I mean, that's a nightmare for OPEC Plus meeting next week in what was already going to be a quite complicated meeting.
Oh, yeah, obviously. I think... Well, so far, I think OPEC still has the upper hand because they can choose to limit the supply, and they can stay put. And I think it is all still very uncertain. So the oil price reaction is quite a knee-jerk one. Okay. So we still think that OPEC likely to have the upper hand, but obviously the near-term trajectory is probably a bit more downward pressure on the oil price, given that people probably traveling less again because of the concerns on the virus, and also just the dampening in the market sentiment. But we still likely see oil prices being quite elevated because we think that the supply is still very much constrained at the moment.
Janet, thank you so much for all of your insight. Janet Moy there, Investment Director at Bruin Dolphin. Now, coming up, it's not just Red Friday, it's Black Friday too, but will supply chain snags and price concerns actually mean this year's deals fail to impress? We talk about Black Friday next. This is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, so we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the quarter three was the quarter that was most affected.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. So Thanksgiving marks the start of the annual holiday season, and with that comes holiday spending. Let's get all of the details with Bloomberg's Ed Ludlow. Ed, good morning. So great to have you in the studio. Look, when you look at the variant, I don't know whether people were going to buy a TV or a washing machine and say, actually, I'll hold off to understand whether I keep my job or not, or whether we're overthinking it.
Yeah, so, I mean, these 4 days are really all about digital sales, online sales, e-commerce. It's interesting because in the States, where there's less discussion around a lockdown, we're not so sure about the threat of this new variant, more people go to a physical store. You know, while it's a novel concept in the UK and the EU, a lot of people are shopping online, and, you know, the early indications that we'll break records for this 4-day period. But, you know, broadly, this season is really stretched now. Consumers globally are spending between November till Christmas.
I mean, these are not impulse buys, right? So we're not expecting the kind of strength to have a huge impact.
Right.
It's not like you go in the store and then you walk out.
Right, and the other side of this is the retailers themselves. They're not discounting. They're facing huge labor costs already, stretched supply chains. It's actually really difficult right now to get inventory. There are so many out-of-stock messages, and the variant, that could impact that too. Because remember, a lot of the COVID restraints are tied to lockdowns. You can't work in certain conditions, so I think that is a concern.
I've been trying to get a mini camera from one of my boys. I haven't been able to find it.
Don't miss the chance.
It's you know, stuck on a container somewhere, and it's just not arriving in the UK. Our Ed Ludlow there with the very latest on Black Friday. In the meantime, investors still dumping risk assets, flocking to havens as this new variant of the coronavirus makes its presence known in global markets. Authorities around the world have been quick to act, so have traders, with the European stock 600 down almost 3%. This is Bloomberg.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
A new variant of concern rattles the markets. Investors flee to safety over this more transmissible COVID strain. European governments come under pressure. The UK, Germany ban travel to and from Southern Africa, where the COVID strain is believed to have emerged. And stay with Bloomberg Surveillance. Early edition will be speaking to the South African Minister for Public Enterprise, Pravin Gordhan, in just a few minutes from now. You can also send in your questions on IB Plus TV Go. Well, good morning, everyone. It's certainly a busy Friday, not the Friday that we were hoping for post-Thanksgiving, where people kind of still digest some of, the turkey they had the night before and do a little bit of admin. I mean, they have to hit the ground running. When you look at investors today, they're really dumping some of the riskier assets and flocking to some of the havens. This is the kind of moves that we're seeing across the market globally. So stocks, U.S. futures slide, treasuries, German bonds, yen are rising. If you look at the South African rand and other emerging market currencies, they're also sliding. Now, the one thing we need to keep an eye on is, of course, authorities around the world have been quick to act against this new variant, but researchers have yet to determine exactly what it is, whether it's more transmissible or whether it's more lethal than previous ones. And the other thing we need to keep an eye on is, of course, the fact that it's very thin liquidity out there because it's the day after Thanksgiving. So some of the moves may be more exacerbated because of that. Bitcoin, 55,000. Down some 6.5%, so not the haven that maybe some market participants thought it would be in this kind of trading environment. So it's been a big year for our collective digital space. Facebook's gamble on the future with Meta was then followed by Microsoft's virtual offering. Now, the total market cap of cryptocurrencies topped $3 trillion, and NFT is in the Collins Dictionary word of the year. Well, we'll have plenty more, of course, on this with our expert, actually, on all things cool and new and shiny, Matthias Lundman. He was co-founder of Atomico, one of Europe's top venture funds, and founder of Moonfire Ventures. Matthias has 20 years of experience investing in the European tech space. Matthias, as always, thank you so much for joining us. I have a lot of questions on what we should be looking at as the next thing to be invested in tech. But first of all, we have this new variant. Markets are falling out of bed. Is that actually supportive about some of the tech stocks that we would use more in lockdown at home?
Well, definitely that's what happened last time, right? So people spent more time at home. We started getting engaged more into gaming, things like that you can do from your home. And of course, the whole world of living in the Zoom world, that all happened during this period. So tech works very well in these types of environments and should continue to thrive.
Yeah, and one of the things that I know you're very involved in is, for example, looking at the gaming market, the global gaming market. And I try and follow it, but I was surprised by this figure, is now worth $180 billion in revenue. Is it going to increase more? And so what kind of companies are you looking at to be the next big thing?
Yeah, no, the gaming market is just incredible. It's a real powerhouse, and I think it always is a little bit overlooked. But it's huge and it's growing fast, still double digits. But I think, to me, what's really exciting within the gaming space is the crypto gaming. And I think that's kind of a new world that's going to be just basically redefine everything we thought about gaming. And so we've seen that grown dramatically. So up from 42 million last year invested in this space to 2 billion to date this year. So it's a 50x increase. But, in general, let's say the crypto space has grown quite a lot as well, where we have 64 unicorns in crypto, but 39 of them came just this year.
Matthias, first of all, what's the valuation on some of these crypto unicorns? So when you talk about gaming and crypto, how will this evolve? So if you look at the platforms and business models, how will they shift in the next 4 to 5 years?
Yeah, so if you look at companies, within the crypto gaming space, they're really embracing the concept of 3.0, Web 3.0, that is. And so before, when you used to play games, you used to basically have things like your cosmetics your different components, your skins. These are things that you owned and you nurtured during playing a game. With crypto gaming, you can actually own these things. You have really true ownership. And that is coming through something that's pretty powerful, which is NFTs. They allow you to sort of continue to own something. And what's cool about it is that they're finite. This means that there's only going to be so many of them. So if there is a creation of a sword or whatever else it is, there's only be so many of them. And then there's a possibility of you being able to use them in different games. So suddenly this becomes real value, true ownership for the player. And I think that's totally redefining what games are about. And we're seeing exciting things. Like you have companies like Axie Infinity growing at pace and, looking at doing 2.4 billion in revenue this year, really from nothing last year. So the space is growing really fast, and the new models are super exciting. And we've invested in a few exciting companies in the sporting space and so on.
So, Matthias, so if you look at, for example, the blockchain gaming, so it does allow, I guess, organic growth in gaming economies where you could also pay gamers to play. Is there, part of the world that's better at making this transition? And is this, 5 years down the line, or will there be significant change that will take longer? Like, what's the pace of change you're looking at?
Yeah, I think that's a really good question. The pace of change right now is enormous. So crypto gaming, this is not something that was invented this year. It actually happened 4 or 5 years ago with the sort of creation of NFTs, and you had a game that became quite popular called Crypto Kitties. But the infrastructure took time to sort of come together. Now we're seeing that the new sort of infrastructure layer is becoming so much more powerful. You're allowing things like games to be able to play at another level. So I think this is something you need to look out at for the next 5 to 10 years. But you're going to see incredible movements even through that period. And I think it's hard for us to sort of really say what exactly is going to happen. But what you have to imagine is that the world of games, and maybe even the world of the digital world, everything that you had there was like renting it, because it all depended on whether your relationship, let's say with Facebook, or your relationship with any game that you were playing that owned that component of the platform. Today, you are the owner of it. So finally, when you have that car, whatever it's your Ferrari in the digital world, it is yours. You can bring it with you. You can have it. And it's a very different mind shift. And I think that's what's so exciting about the space.
So, Matthias, first of all, how does NFT fit in all of this? But also, if they dwarf some of the older models, who has the most to lose?
Yeah, so that's a really interesting question. So, will these big platforms be the places of the future? And I think what's going to happen is that they're going to continue. Like today, you see Microsoft is still an important player in the market. But you have had the advent of new companies like Facebook and Google and Netflix and whatever else, right? But I think what you're going to see is that maybe their dominance and their position might be very different over the long term, because you have the ability of these new entities coming up. And so I think that many of these are going to be challenged because it's on a new platform. You don't necessarily even need to be using those platforms to make these things happen. So you don't need to be, when you're playing a game, you don't play it on Apple or Android. You're playing it through another system where you're buying the goods. So they're not getting part of that transaction.
I guess the concern with crypto gaming, though, is the ESG cost of all of this. So, how do you address it? And is that what could hold it back, or is there a company that could step in and make it greener?
Yeah, no, so I think that this is, again, it's a new beginning, and there's some great technologies out there that are being developed. And so the costs of doing these things are actually going down because of the innovation. So I think that these are just sort of quirks and issues and problems that we have. But going forward, it's going to become easier and easier. And overall, I think actually the digital space is, let's say, comparing it to the industrial world, it's obviously a lot more green. So I think give it time and allow us to have a little bit more innovation happening here, because this is the beginning. We can't forget that. This is like, we have to sort of, if we go back in time, this is a little bit like us looking at at websites and thinking of them as brochures. And today, as you know, a website is a lot more than that.
Yeah. Matthias, thank you so much, as always, for making us a lot smarter in some of these spaces. Matthias Lundman, they're founder of Moonfire Ventures. Now, in the meantime, we're still seeing this huge sell-off in the markets that's not actually, slowing down at all. It's still being exacerbated or being fueled by some of the concerns about this new variant. We know very little about the variant. We don't know whether it's more lethal. We don't know whether it spreads easier, but certainly the market reaction is quite intense. Remember, this could also be because of liquidity. It is the day after Thanksgiving, so a lot of traders actually took the last couple of days off. If you look at the markets overall, U.S. futures sliding, European stocks down, treasuries, German bonds, yen all rising, and then the South African rand and other emerging markets are also sliding. So there's a clear trader, move flocking to havens and investor dumping some of the riskier assets. You can see crude oil, for example, WTI at 73.06, down almost 7%. Coming up, more European countries ban travel from South Africa due to the new COVID variant. We'll speak to the country's Minister for Public Enterprise, Pravin Gordhan. Send in your questions on IB Plus TV Go. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
It's such an interesting new world. The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think we'll end up being on the right side of history as well.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. It's the day after Thanksgiving. A lot of traders would have hoped for a sleepy trading day. I mean, it's the complete opposite we've been getting over the last 17 hours. Pretty big moves that we've seen, and they're not getting any better or any slower. Now, overall, there's a move from investors dumping risk assets, flocking into havens. This is as a new variant of the coronavirus made its presence known in global markets. If you look at stocks across the world, U.S. futures down, treasuries, German bonds, and the yen rising. So if you look at some of the things that we know, authorities around the world have been quick to act against this variant. Researchers, though, have yet to determine whether it's more transmissible or whether it's more lethal than previous ones. Well, we're delighted to be joined about the virus, but also a lot more about what's also going on in South Africa from a company point of view by the Minister for Public Enterprises, Pravin Gordhan. Minister, thank you so much for joining us. This is, a pretty ugly day in the markets overall. When we try and understand what the variant is, South Africa is really at the forefront of trying to understand and sequencing what we know. What information do you have that could make us, help us make an informed decision of what we could be dealing with next?
Good morning, Francine, and thank you for having me.
Well, as you correctly put it, the scientists in South Africa have certainly been at the forefront of working out the sequencing of the genes on these viruses. Secondly, they've indicated that there is a new variant around. Thirdly, as you indicated, it's a bit early for them to decide whether it's more transmissible or whether it will evade and escape the vaccines that are currently available. But I'm sure that in the next 10 days or so, as there's more clarity after a bit more work and more discoveries elsewhere in the world about whether this particular variant has been seen other than in Hong Kong, Botswana, and South Africa, the extent to which it has spread across the world as well. So I suppose there will be a period of uncertainty, which is being reflected in the markets at the moment.
But Minister, and really there's a huge lack of information, and yet the UK, Israel, and other countries have temporarily banned, flights from South Africa and 5 neighboring countries as precautionary measures. Do you think they were too quick to act?
Definitely. On the one hand, we say scientifically that there isn't enough information, that we're waiting for more clarity on issues of transmissibility. And the UK once again responds in the way it has done so in the past, where it thought that the Delta virus was unique to certain countries, when in its own backyard in Kent, there was the Gamma virus that was actually developing. But secondly, I think we need to see this as a global issue, pretty much like climate change itself, and that these variants are going to spread. And nobody has an answer as to whether there will be newer variants, particularly in a context where vaccines are not universally available, particularly on the African continent, but elsewhere as well. So the vaccine divide has a major impact on these issues as we go on, and how long this pandemic will last.
Minister, how much more pressure are you actually expecting on the South African economy? I know there are a number of questions that I want to ask you about reorganizing Eskom, about what happens, for example, to SAA. Is there a danger that actually this gets pushed to one side as you have to deal with this new variant?
But those are matters, I think, in the next few days that government will apply its mind to. Secondly, obviously, we've learned a lot of lessons from the first few waves, so to speak, that we've been through and the rest of the world has been through. And thirdly, the balance between lives and livelihoods is one that has to be carefully managed. And those are some lessons that we've learned from the past as well. So I think we'll have a clearer idea next week and in the weeks ahead as to how we manage this particular period. In the Northern Hemisphere, you're going through your winter. In the Southern Hemisphere, we're going through our summer, and the summer holidays are going to themselves create movement of people on the one hand, but also gatherings that could pose risks as well. And all of these will have to be managed both with non-pharmaceuticals on the one hand, but for riskier people, the Minister of Health has indicated that from the 30th of November, an extra dose of both J&J and Pfizer vaccine would be available.
Minister, one of the questions that I wanted to ask you was, of course, the state of play with regard with the sale of the stake in the South African Airways. I mean, does this, complicate that matter further? Like, where are we on that?
Well, that's still going through certain legal processes, but the sale is certainly moving in the right direction. And we were hoping that by the end of the year, some of the decision-making would have actually happened, and that's still possible. And there's a few more regulatory hoops that we have to jump through. So early in the new year, that process should be completed, which is quite an important one for South Africa, where previous state-owned asset is now going to be privately owned to the extent of 51%, with government holding a 49% shareholding. But that should be on its way. Aviation has also, I'm sure, learned its lessons through the different waves of the pandemic. And we will see how that impacts on aviation globally as well.
Minister, had the price been agreed actually with the buyers for the stake? And do you worry that, with the resurgence of this virus that is putting a pressure on airlines, certainly today, I don't know for how long for, that price could be even lower than you had negotiated?
The price is actually based on the fact that the SAA has just come out of business rescue on the one hand, but more clearly on a valuation of assets. And that valuation should persist as we go through this particular period that I have outlined. So I don't expect that there will be any negative impact on the price.
Minister, how long do you expect power shortages to persist? And are you any closer to actually reorganizing Eskom's debt and bringing it to a more sustainable level?
Well, that's the big one. That's 400 billion rands worth of debt. Eskom, in the first instance, during the course of the past year, has been able to use certain market conditions and help from the Treasury to reduce the debt from about 480 billion rands down to 400 billion rands. So that's the first good move. Secondly, the restructuring of Eskom is reaching a point where the separation of generation, transmission, and distribution is likely to take place fairly soon. Thirdly, that will give us a much better idea of valuations of each of the three entities. And then we'll have to work out how we attribute debt to each of those different entities and then resolve the remaining amount.
But, Minister, do you think the government will take over part of the debt?
That's the big decision that the Minister of Finance will have to make between now and February next year.
And your gut feeling, are you leaning, do you think he's leaning in a certain direction?
Well, I mean, look, it's very clear to all of us that South Africa is facing serious fiscal constraints as a result of the pandemic, and its intention to support, as I said, lives and livelihoods over the past year or so. So those constraints are likely to be there given the possibilities of the new variant having some negative impact. And all of that will have to be taken into consideration by government as we get into the next 6 weeks after the holidays.
Do you think the CEO has to quit of Eskom, or does he have your full backing?
Oh, he has my 150% backing. Eskom is an entity that has gone through a difficult time, and the challenges in Eskom are not easy ones, given the problems that we've had with corruption and what we call state capture in South Africa. So on the one hand, it's got to recover from its past. On the other hand, it's got to ensure that its current operations happen efficiently. And then thirdly, it needs to prepare for a future, both in terms of the restructuring of Eskom, but also in terms of the impact of climate change and renewable and other types of energy coming onto the grid as well. So it's a formidable period that we're going to go through over the next few years that has to be led properly, both by the board and the CEO and his management team. And in fact, we need to take extra measures to give him the support that he requires.
Minister, before I let you go, I just want to go back to this new variant as we try to understand exactly, who it's impacting, and we don't know whether it's, it spreads more or it's more deadly. But I think you found 90% of the new cases are because of this variant. Can you tell us a little bit of what the thinking is on how many people ended up in hospital? Like, given what we know now, that's very little. What did you see?
At the moment, in the last week or so, our Minister of Health has indicated that there has been a not slight, but a significant jump in the number of infections that have been detected, and that positivity rate has increased from below 1% to around 5% or so. But those numbers are very early numbers. Hospitalization hasn't quite begun to take off yet, and if you're vaccinated, as you know, there is the extra protection that you have from serious health issues impacting on one individual or any individual, and that will be helpful as well. So the key is still access to vaccines, which South Africa has now, Second is to have the majority of the population vaccinated so that they have this extra layer of protection. And thirdly, it's the better understanding of the variant as we go on.
Minister, thank you so much for your time today. Pravin Gordhan, their South African Minister for Public Enterprises. Now we'll have plenty more, of course, on what we know and we don't know about the variant shortly. This is Bloomberg.
Competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the US to the UK, and now it's open, of course, to UK nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力，都有的啊，但要看怎么一个结局。说我们不做任何挑衅啊，但如果把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判，那全面啊，我们这样研判的。
China
China has, I've spoken with Xi about Taiwan. We agree, we'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We've definitely seen some signs of euphoria and some signs of risk in the short term.
You need to rebuild stocks, but we're not at that point where stocks are at a comfortable level.
The supply channels are not going to rectify themselves quickly, and there's a chance that we've actually seen some over-ordering along the supply chain.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. New threat, stocks, treasury yields, and oil sink as a new virus variant discovered in South Africa sends a wave of caution across global markets. Flight risk. A number of governments around the world move to tighten restrictions on travel from countries in southern Africa. And Black Friday is here, but will the new virus variant add to a growing list of holiday headwinds? A very good morning, everybody. I'm Anna Edwards, live in London with Tom McKenzie. Kaylee Lines is with us in New York. Matt Miller is off this week. And Kaylee, we interrupt your Thanksgiving with news of another virus variant, and this one seems to certainly have sent risk assets into a tailspin.
Yeah, Black Friday has turned into a decisively red Friday, Anna. You really saw that evident in the Asian session overnight, and you're seeing follow through in Europe and when it comes to U.S. futures. Now, as for how the picture looks in Asia, the GMM function on the Bloomberg terminal shows a really beautiful picture of it. For our listeners on radio, basically all you need to know is that in the equities column, it is straight red, and we actually have a number of benchmarks that moved 3 to 5 standard deviations to the downside. In Hong Kong, for example, stocks were off more than 2.5%. In foreign exchange, most currencies are also weaker against the dollar, the one exception being the Japanese yen, getting a big safe haven bid today. It is stronger against the U.S. dollar by 1.1%. You are also seeing a bid coming into safe haven bonds really across the Asia Pacific. In Australia, for example, the 10-year yield down 13 basis points overnight, while commodities across the board are getting hit because the new virus variant is raising some concerns about demand. Now, as for the picture here in the U.S., it is very similar. 4.5 hours to go until the opening bell, and right now S&P 500 futures are down 1.8%. You are seeing that similar bid coming into the Treasury market. The 10-year yield down 11 basis points. We're sitting at sub 152 right now. Oil, one of those commodities getting hit hard. WTI crude is down 6.5%. Right now we're trading down at $73.25 a barrel. And then Bitcoin has been trading pretty much in tandem with other risk assets, so it is getting hit by that broader risk-off tone today, Tom. Bitcoin right now down almost 7%. We're trading sub $55,000.
Yeah, just a reminder that cryptocurrency is no safe haven in this kind of environment, even if investors a few months back might have thought that Bitcoin is a place you might have wanted to be when risk is prevailing. Here's what's happening across the European space then. This pressure is extreme. You're seeing falls of almost 3% across Germany. The CAC 40 is one of the worst performing major indexes, down 3.3%. Here in the UK, losses of 2.8%. Broad-based selling. But we can switch it up and see how things are bearing out in terms of that work from home and reopening play that is being accentuated here. Some of the stocks, of course, are gaining on the back of this. HelloFresh is a food delivery company, up 3%. Ocado, also in the food delivery space, gaining 1% as well on bets that this is a space that will benefit as the concerns about this new variant continue to rise. And of course, in the Eurozone, looking at lockdowns already prior to this latest variant. IAG, though, this is the flip side of this trade, down almost 11%. This is the owner, of course, of British Airways. Ryanair also lower by 7%. Governments around the world putting in place curbs and restrictions on South Africa and countries around it. Eurodollar currently at 112, and the bid in terms of treasuries from the riskiest to the least risky, the German Bund 6 basis points lower, and the Italian BTPs also lower as well as investors move into these safe havens. Spot gold gaining 1% at 1,800.
Yeah, really interesting to see the downdraft that we're seeing when it comes to equity markets, but specifically around travel and leisure, but actually bouncing off their lows of earlier, Tom. And the banking sector here in Europe, now the worst performer, which is worth noting on a day like today as we gear up for US trading. Now we'll look at what lies ahead for us today. And as we mentioned in our headlines, and as we thought might dominate our conversation today, it is Black Friday, that shopping event in the United States and elsewhere. But deals are shaping up to be perhaps a little underwhelming. Discounts on sporting goods and appliances will be lower than last year amid tight inventories and rising inflation. People perhaps just glad to get their hands on stuff at whatever price. Now at 8 a.m. New York time, the Bank of England chief economist Hugh Pill will be speaking at the Confederation of British Industries conference on the economic outlook. He'll be closely watched ahead of December's rate decision from the BOE, and very close to where I am, a London tube drivers' strike is set to come into force, or already has, in fact, a 24-hour walkout affecting 5 lines and to varying degrees. This is after failing to resolve a scheduling dispute over the restoration of overnight services. But a lot of people work from home, so maybe some people care about that and some people not too affected. What we all want to hear from, though, or hear about, is the new variant of the coronavirus, first discovered in South Africa, in southern Africa. The World Health Organization is meeting at 6 a.m. New York time today to discuss the new COVID-19 variant. We will look for response after that. But what do we know about it already? What if anything, is justifying this real extreme risk aversion we're seeing in these markets? Now, Sam Fazeli, senior pharmaceuticals analyst for Bloomberg Intelligence, joins us now. Sam, what do we know and what do we crucially not know about this variant? Why are we seeing such a risk-off interpretation in markets?
Yeah, good morning, Anna. So I think the reaction is to the fact that often very level-headed scientists are raising their eyebrows at the state of the number of mutations in this variant, 32 to be exact, in the so-called spike protein, compared to 10 that we've got with Delta, Mu, or Beta. So that's what's worrying about it. And I think what South Africa is probably seeing, and I'm sure the data will continue to build over the next few days, is a very rapid rise in the prevalence of this variant. And so put that all together, people are now worrying that it would be even less responsive to vaccine or prior infection-induced immunity. Yeah. And that it will spread faster.
So Sam, on that point, is there a correlation between the number of mutations and the efficacy of vaccinations against it?
So Keely, that's a really good question, but it's a lot more to do with where these mutations are. The spike protein is where the majority of the antibodies that are induced by vaccine, because that's what you get the spike sequence, and also the majority of antibodies that come from an infection are directed to. So if there's lots of mutations there, the thought is that that's possible, that therefore the antibodies won't be able to neutralize the virus. So that's where it comes from. There is no direct correlation. There are some mutations that are worse than others.
Okay, Sam, thank you very much. And as you pointed out to me earlier on, there is no data on the severity of this new variant, and that's a crucial part of the puzzle still yet to be unearthed. Sam Fazeli, senior pharmaceuticals analyst for Bloomberg Intelligence. And later this hour, we'll be speaking to Emma Hodcroft, molecular epidemiologist from the University of Bern, who has been dedicating herself of late, of course, as many scientists have, to the fight against COVID-19. Now, a number of governments around the world are moving to tighten restrictions on travel from countries in southern Africa. So far, the European Union, the UK, UK, Israel, Singapore, Japan have all placed emergency curbs on travel. Let's get more on this with Bloomberg's Maria Tadeo, who's with us. Maria, what is the state of the response that we've seen from European authorities? Because as we've just hearing from Sam, there's a lot we don't know still about this mutation, but European governments and others around the world reacting now, just in case. Apologies. Seems we don't have Maria Tadeo. We will try and get back to her. But Kaylee, the point I was making there, we don't know a lot, but we are seeing governments respond. You know, we have to wonder whether we'll see governments when everybody wakes up after Thanksgiving in the United States, whether we get any response from the US as well.
Yeah, it'll be interesting to see if President Biden has something to announce when he returns from up north where he's been spending the holiday. Now, speaking of holidays, it is the start of the holiday shopping season, really crunch time for US retailers as masses of shoppers return to in-person shopping for Black Friday. But this new virus variant adds to a long list of concerns facing the retail industry. For more, let's get on over to Bloomberg's Ritika Gupta. So Ritika, what are we expecting today and really from the broader holiday period?
Yeah, Kaylee, well, data from the US and Europe does show that foot traffic in stores is slightly up from a year ago, but of course this new COVID variant could put some of that into disarray. But if you're expecting your traditional Black Friday deal today, you may want to think again. Because
yep. So Ritika, it seems like we're having a little bit of issues with your audio there, so we will get back to that in just a moment. For now, though, I think we can check Anna on Maria Tadeo. She's available?
We can try. Let's try and do that. Or maybe we'll discuss some of these big markets moves amongst ourselves and await further instruction. I mean, the stock 600, Kaylee, just as we're waiting for US markets to get into their stride, of course, even though it is going to be a low volume session, it usually is, at least post Thanksgiving. So we do need to bear that in mind. We do have European equity markets down by 2.5%, so keep that in mind. But off lows that we saw earlier, if that's any kind of silver lining. Now, you're right, Kaylee, we can get to Maria Tadeo, who's been keeping across the government response to this latest variant, first identified in Southern Africa. Maria, give us a rundown of how the European governments have responded to this, because they've been busy enough with the COVID fight up to this point, with the fourth wave of the Delta variant. But tell us what kind of early responses we're seeing now to the new variant coming out of Southern Africa.
Well, Anna, you're going to see Germany, of course, Austria, Italy, and I guess by the end of the day, many more European governments decided that they are going to block travel from countries where this new variant has been identified. And I was on the phone this morning with actually a very senior European official, and I asked him, how serious do you think this is? And this is just minutes after the recommendation to block travel came out, and he said, it's actually very serious, and we're going to take no chances. So a lot of this, we'll have to wait and see whether or not this is a panic reaction, whether this is a knee-jerk reaction, but the impression that I got is at this point, the numbers that they're looking at and they're facing for this winter are already worrisome enough that they just decided to go nuclear and kind of just ban everything.
Yeah, and of course, Maria, this is a nod to that. There is already this deep concern in Germany about the level of cases. You add on to that the new variant, the steps being taken by the government, and they're not ruling out, the German coalition, the new coalition, at least health ministers, the current health minister, not ruling out a potential lockdown.
Yeah, and you know, at the start of this week, there was a meeting behind the closed doors in Germany with the CDU and Angela Merkel, who, as you know, is leaving. And essentially, she said the situation is now set to be very serious. And some of the numbers that they're looking at is potentially cases doubling in the space of 14 days. We know that in some regions in Germany already, hospitals are reaching over capacity. We're looking at Saxony, Bavaria, and so on, facing very quick, fast infections. So looking at what is still a very complicated domestic picture, potentially more restrictions to come, they've decided we don't want to take any external chances at this point until the situation calms down, and then we'll see what we do.
All right, Bloomberg's Maria Tadeo, thank you so much. And now I want to get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. One unrelated to this broader macro theme of the virus that we're talking about is DiDi Global. This is, of course, a Chinese ride-hailing company that is listed in the U.S., but if China has its way, it may not be for much longer. Bloomberg reporting overnight that Chinese regulators have asked executives of DiDi to delist the company from the New York Stock Exchange. And as a result, those shares are down the better part of 7% before the bell. And of course, as Maria was alluding to, we have a lot of travel restrictions going back into place, specifically as it relates to Southern Africa. And as a result, travel stocks really across the board are getting hit hard. Cruise lines, the likes of Carnival or Norwegian, down 9% and 8% respectively. And you're seeing airlines broadly lower as well. Delta and United Airlines each down more than 6%, Anna.
Yeah, absolutely. And we have an echo of that here in Europe with some of the travel and leisure stocks also being hit. Broadly, we are, as I said earlier, just off our lows, but we're still down by 2.5% on the stock 600. We have some heavyweight names, the likes of Airbus, down earlier on this morning by more than 10%. And that's really going to take the edge off the CAC 40 as we watch Paris. So global markets really responding to nervousness and a lack of data in many cases around this new COVID variant first detected in Southern Africa. More on the markets next. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie alongside Anna Edwards here in London, Kaylee Lines in New York. The pronounced COVID-induced selling continues, has been sustained across the European space, down more than 2.4% across the European stocks 600. The futures in the US pointing to losses of 1.7%, and the bid for safe havens, the Swissy, the yen and gold all pronounced. Treasuries as well, yields significantly lower. Let's unpack all of the market action then with Eddie van der Walt of Bloomberg M Live. What a day, Eddie. I just need to pause to take a deep breath there. We've been covering this for the last few hours. What do you make of the market reaction? Is it an overreaction given, as Anna's been pointing out, there is a lack of data about this new variant? The WHO says it may take 1 to 2 weeks before we know how dangerous this new Southern African variant really is.
You know, I went to bed last night. It was all calm. It was all good. You know, Thanksgiving.
Happy Thanksgiving.
Yeah, absolutely. And I woke up and it was all systems go, right? And I was really glad that I got to the office early this morning because, you know, the markets are really reacting to this. And there is a sense in which, you know, we've had variants before, as you say. You know, this one is a little bit different. If you look at Sam Fazeli's piece earlier today from Bloomberg Intelligence, it's really smart, tells you exactly why it is that people are so worried about this. But that being said, we've had variants before. We've not had this kind of market reaction since the early days, right, on news of a new variant. I think there's a sense that markets had a really big run-up and that people were... There was a little bit of a, you know, looking for a reason to sell. We've seen that hedging activity has been picking up in the stock market anyway ahead of this. But it's really interesting to see where exactly people are looking for havens, to your point.
Yes, and let me ask you about that, because of course the playbook says you get out of equities, you get into safer currencies, you get into bonds, and you get into, in particular, out of travel and leisure stocks, and get out of oil, and we're seeing all of that play out here. But interestingly, in the bond markets, we are seeing them acting as a haven, and we're seeing the markets effectively unwind some of their bets on Fed tightening here.
Yeah.
Does that make sense? Is that a bit of an overreaction, or we just can't say, so markets are taking a cautious path?
You know, to me, that's one of the big indicators that markets were looking for a reason to reprice a few things anyway, because the bond market had got ahead of itself a lot on, on pricing rate hikes, particularly from the ECB and other places, right? And there was pushback from policymakers saying you're too aggressive. And I think now at this stage, now just where we see this pullback, I think we get that broad-based repricing across markets. For me, what is interesting is that we're not getting that big dollar bid. And the dollar bid has been...
Getting a euro bid.
We're getting a euro bid. It's really odd. Really, what I've come to expect to see on these big sell-offs is a dollar bid and gold selling off in the early phases, and we're not seeing that this time around.
Well, something we are seeing in this sell-off, Eddie, is oil is getting hit incredibly hard. When you have this concern on the demand side, plus on the supply side, you have countries, including the U.S., releasing oil from their strategic petroleum reserves. How does that all add up, the equation for OPEC plus?
Yeah, the oil move is the one that really makes sense in this environment because, oil, if people aren't going to fly, if people aren't going to move, if we're going to see more broad-based lockdowns being put into place, regardless of what the data later on the virus says, what we know now is that we are seeing additional travel restrictions. If people don't move, it hurts oil prices. We saw that last year when WTI went negative. Now, we're a long way from that. Nobody's saying we're going to go negative on oil at these prices. But, I think it's a real headwind for OPEC, and OPEC already facing headwinds across the board. So I don't think we're seeing OPEC taking action to cut back on.
Okay, Eddie, thank you very much. We'll look ahead to next week and that meeting. Eddie van der Velde joining us there from Bloomberg's Markets Live team. Thank you very much. A quick check on those markets then. European equity markets still under pressure, down by 2.5%. US futures, E-minis, Dow futures, NASDAQ futures all point to the downside, more than 1.5% on two of those. NASDAQ futures down by 1.2%, so a little bit cushioned there by, of course, the lockdown economy. We see money going into bond markets. We see money coming out of oil. The Brent price at $78 is the handle there, down by 5% in just this morning's trade. This is Bloomberg.
Extra $1 trillion in spending, not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal. But Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point, when the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards and Tom McKenzie in London. Now let's get the first word news. And oil is falling today as a new COVID-19 strain raises concerns about the outlook for demand. The drop comes ahead of a key OPEC Plus meeting to decide production policy for January. The group has been under pressure from the U.S. and other consuming nations who tapped strategic stockpiles to tame rising energy prices this week. In Russia, those close to the Kremlin say President Vladimir Putin doesn't want to start another war in Ukraine, but would fight if necessary in order to stop the creeping expansion of NATO there. People close to leadership say the Kremlin knows any attempt to occupy large amounts of Ukrainian territory militarily would face widespread public opposition and trigger potentially crippling sanctions from the West. The list of countries banning flights from South Africa and 5 neighboring countries is growing over worries about a new COVID-19 variant. The UK is placing the 6 nations on its red list, requiring travelers to quarantine in hotels upon arrival. Scientists are still trying to determine whether the new variant is more transmissible or more lethal than the previous ones. Meanwhile, Hong Kong has confirmed it's found 2 cases of the new variant in travelers who arrived in the city. And China is said to have asked Didi Global to delist from its U.S. forces over security fears. Our sources say tech regulators want the ride-hailers management to take the company off the New York Stock Exchange because of concerns about leaking sensitive data. We're told Didi has been ordered to work out precise details for the delisting, with privatization or a Hong Kong share float both under consideration. So, Tom, this saga with Didi has been drawn on for some time now, but this action, according to our reporting, would be among the most severe.
It would, and I would remember that when Didi vanquished Uber in China, and this was the Chinese champion beating back Uber that had spent something like $1 billion every single year to try and carve out market share. Now they are clipping the wings once again of Didi. Interestingly, the privatization may involve state-backed companies as well. So ultimately, you could see the government taking over Didi. We'll see how it plays out.
Yeah, indeed. And is this going to result in a delisting, or is it just going to result in another listing? That's something that's also being talked about here. But it's an interesting one that on a day where we're very much focused elsewhere, the market's focus is on selling risk assets because of concerns around COVID-19 and the latest variant of that. What will we see in terms of tech reaction to this? Because this is another preoccupation for markets, but does it get kind of pushed to the side because of our overriding concerns around COVID? And transportation would be part of that concern, of course. Coming up on this program, more on that new variant with Emma Hodcroft, molecular epidemiologist from the University of Bern. We know a lot about these mutations, 32 of them, we're told by our colleague Sam Fazeli, and that's what makes people worried. It makes people concerned about transmittability and also around the vaccine effectiveness. But what do we know about severity of disease? Not very much. We'll get the latest from Emma shortly. This is Bloomberg.
there's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same. It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards with Tom McKenzie in London and Kaylee Lines in New York. Matt Miller is off this week. And Tom, we're just getting some lines coming through from the World Health Organization. We know that meetings are taking place, of course, at the WHO around the new variant, the new one first identified in South Africa. It doesn't have a name yet. They're going to decide how to categorize it and give it a name if it needs one. But they're saying that it will take several weeks to determine the impact of the variant. And that gives investors something to think about, doesn't it? Because it's one thing to sell off to this extent whilst you're waiting for some information that'll come in a couple of hours, but where do we go for a couple of weeks?
As you hold off and wait for that data, we know that it has 32 mutations. Sam Fazeli has pointed it out, more mutations than any of the other variants, so that has some implications. And we know that within that area of Johannesburg, South African officials have said that it now accounts for 90% of cases. But just how dangerous this is still remains unknown. It seems we're going to have to wait.
Yeah, absolutely. Kaylee, what are you looking at across these markets then ahead of the start of US trading? Of course, a lot of companies within the travel and leisure sector are going to be hit hard, although worth pointing out that it's also the banking sector being hit hard here in Europe as well.
Basically, stocks across the board are getting hit hard, Anna. As you point out correctly, a lot of things are still uncertain when it comes to this variant, but if there's one thing we know, it is that the market hates uncertainty, and that is definitely showing up in equities today, down across the board in Europe. Yes, we are off of the session lows, but still, the travel and leisure sector, as you were alluding to, travel getting hit hard, down the better part of 5%. And here in the U.S., with 4 hours to go until the opening bell, S&P 500 futures down 1.7% at this moment in time. You are seeing a bid coming into the safe haven treasury market. The 10-year yield is down 10 basis points. We are south of 153. And oil also getting hit incredibly hard. There's a lot of concern now about what the demand picture will look like if people are not indeed traveling. Right now, WTI crude is down more than 6.5%. We're trading at $73.24 a barrel. Now, as for the individual equity movers in pre-market trading, there are decisive COVID-related losers and COVID-related winners. On the losing side, travel, as I mentioned, Royal Caribbean is down the better part of 10%, and you're also seeing a lot of the energy complex under pressure. Apache, for example, down 7%. But on the winning side, those traditional stay-at-home players are getting a nice bid today. Zoom Video is up 8.5%, and Peloton is up the better part of 6%, Anna.
Kaylee, let's get back to our top story, which, of course, is around COVID-19 and the latest variant that is rocking global markets, as Kaylee has just set out for us. South Africa's Minister for Public Enterprises and former Finance Minister, Pravin Gordhan, expects more clarity on the variant in the next 10 days.
I'm sure that in the next 10 days or so, as there's more clarity after a bit more work and more discoveries elsewhere in the world, about whether this particular variant has been seen other than in Hong Kong Botswana and South Africa. So I suppose there will be a period of uncertainty, which is being reflected in the markets at the moment.
The minister, as I mentioned, from South Africa, and of course relevant because that is where this has first been discovered, first identified. Emma Holdcroft joins us now, molecular epidemiologist, at the University of Bern, and you've dedicated a lot of time in recent years, Emma, I know, to like many scientists, the fight against COVID-19. So there's a lot we know and a lot we don't know here. Can I start with the transmittability, or the spread rather, of this variant so far? So we know it's in some countries in Southern Africa. We know it's in Hong Kong. I think I saw cases of it elsewhere as well, at least in one other country. Can we assume it is much further spread than we've already identified? Are we always playing catch up with this virus?
Unfortunately, that's very often the case when it comes to these variants. By the time that they've spread enough that they start being detected by surveillance systems, they're usually more widespread than we think from those first few samples. And we'll probably hear in the next few days that it's been detected in a few more countries. Of course, there's a big difference between having a few cases in other countries around the world and having widespread transmission. And that'll be what we start to pick up in the next few days, how many times it's been exported and whether it's transmitting locally. I think it's really hard to say right now whether this new variant is much more transmissible or maybe just a little bit. One thing to keep in mind is that cases have actually been pretty low recently in South Africa, which means this variant may not have had to directly compete against Delta. We'll, of course, be learning more about this in the next few days and figuring out whether this does seem to be something that's comparable to Delta in transmissibility, or whether it might be more on the immune evasion that's the concern and that it might not be more transmissible. This is what we have to wait for more data to know.
So that's what we have to wait for more data on. We also heard from the World Health Organization. They say it will take several weeks to determine the impact of the variant. There's the transmittability, but there's also the severity of the disease that is caused, Emma. Do we know anything about that yet?
Unfortunately, we don't. Even though there's been a few hundred people identified in South Africa that have this variant, this is data that's just coming in new. And for a lot of people, of course, coronavirus is not that dangerous. They don't have very severe symptoms. They may be asymptomatic, especially if they're young. And so we have to keep this in mind. This is why it can be difficult to say. If this has spread, perhaps particularly among a group of young individuals, that may not tell us a lot about whether this is a threat, for example, to people with existing conditions or to older people. This is why we often have to wait for larger data points before we can really tell if there's a different clinical outcome.
Emma, you're a scientist, so were you surprised at all by this, given some of the vaccination inequity between places like South Africa and the Western world?
I do think this is a really important point to talk about right now. The total vaccine coverage for people who've had both jabs in South Africa is only about 28%. That's much, much lower than even some of the worst vaccinating countries in Europe. And this does mean that the virus has new opportunities. For the virus to make new variants, it has to be able to spread and transmit. The lower we keep that transmission, the less chance we have of seeing dangerous new mutations. And so I think we do have to talk about, while we have this vaccine inequity around the world, you know, are we opening the door and giving the virus the opportunity to discover these new variants? And could we be preventing this by making stronger efforts to get vaccines out to countries like South Africa?
Of the vaccinations we have now, though, as the virus is allowed to mutate into more and more different forms, will those vaccines become less effective?
This is the question that I think everyone is really concerned about. One thing I really want to emphasize is that it's incredibly rare that we have some mutations that make a vaccine completely useless. That's something that we generally don't see. It's more a question of, do the vaccines become slightly less effective? Similar to what we've seen with the immune waning, for example, in people that had their second vaccine 6 or more months ago. So I really want to emphasize that it's very unlikely the vaccine will stop working entirely, and the vaccine will still probably give you a considerable amount of protection. It's more about whether that protection is decreased enough that it's really concerning, and whether, for example, we need a new formulation vaccine booster to get that protection up to where we like it to be high in the 90s. But even 60, 70% protection is better than nothing.
Emma, we've seen these curbs on travel. What is an appropriate policy response at this stage, given what we know, and importantly, what we don't know about this variant?
This is a really tough question. As a lot of people have been saying today, the tough thing about travel restrictions is that particularly for less well-developed countries, they just don't seem to work as well. My screen froze.
Okay, we can still hear you, Emma. So you're talking about how some of these measures work better than others and the complexity for governments. It seems like we've had some technical problems. We have lost Emma, but she was giving some really important insights in there. And also some, well, Emma's back. Emma, do you want to continue your thought?
Sorry, I was just saying that the problem with travel bans is that they can be really economically disruptive to low-income countries like South Africa and many other countries where we've seen new variants. What we don't want to do is to punish countries for sharing data, or else next time they see something worrying, they might say, well, we're just not going to tell anyone because it's so harmful for us. So if you do travel bans, I think one thing we have to remember is it might be too late. We might be better off making more action in our own countries to find it and stamp it out where we see it. But if we have them, we need to keep them as short as possible, and we need to make sure we're supporting the countries that recognize and that share this data with money, with support for surveillance, and with healthcare support as well, so that they will come back next time if they see something worrying again.
Emma, thank you so much. Thanks for joining us. Emma Hogcroft, molecular epidemiologist at the University of Bern. Some really interesting points, helping us get a sense of the scale, if you like, the size and scope of the threat we're dealing with at this point, and what we crucially don't know. Let's think about one of our other top stories today, and that is, of course, the fact that it is Black Friday. We're going to be speaking to Anita Balchandani, who is McKinsey & Co. partner, specializing in retail and other things beyond. We will talk to her shortly. This is Bloomberg.
You should be thinking about formerly incarcerated people as representative of their families also and of their communities. These are human beings. They're not disposable items. They are not to be warehoused, locked away, out of sight, out of mind. And so I'm out here in the public because I am the conscience of those folks of America, I hope. I'm hoping to prick their conscience and know that I am just a symbol of a much greater problem.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards and Tom McKenzie in London. Well, it's crunch time for U.S. retailers as masses of shoppers return to in-person shopping for Black Friday. But the new variant of COVID-19 adds to a long list of concerns facing the retail industry. For more, let's get to Bloomberg's Ritika Gupta. So, Ritika, let's try this again. What do we expect from not just Black Friday today, but really the rest of the holiday season?
Yeah, Kaylee, well, data from the U.S. and Europe is suggesting that foot traffic within those physical stores is actually slightly up from a year ago. But, of course, this new COVID variant could put some of that into disarray going forward. But Kaylee, if you're expecting some of those Black Friday deals that you're used to, you may want to think again, because Adobe is saying that even going into this Black Friday shopping period, a lot of those deals and some of those major categories are a lot shallower, from electronics, sporting goods, appliances, and in some categories like tools, you're actually getting no bargains at all. And this, of course, is at a time when the demand from the US consumer is sky high, and Adobe are expecting we'll see about between $5.1 and $5.4 billion worth of sales. So that is a record. Now, if you combine that strong demand picture with some of those supply side issues, lower inventories and inflation, this is actually providing a once-in-a-lifetime opportunity for some of those retailers to scale back on some of those promotions. So this industry is making a big bet here that they can forego those promotions to offset inflation, and all the while not impacting consumer demand. So this is really their strategy here, and they're hoping that this is really going to protect their margins. But of course, this strategy, it may work this year, but we don't know about next year. Retailers, it's going to be difficult for them to forecast demand, and now with this COVID variant, that could also put things into disarray too.
Well, speaking of the margins, Ritika, we of course just had earnings from a number of retailers, and some were disappointing and some were actually doing okay. What causes the difference between them?
Yeah, Kaylee, that's right. We have really seen this stark divergence in these earnings report between the haves and the have-nots, those retailers that can weather the supply chains and those that couldn't. And you really see that reflected in the share price reaction. So the Gap and Nordstrom, those were really punished by investors after the earnings because they just couldn't take advantage of that strong consumer demand in the US because of those higher costs, because of labor shortages, because of some of those supply side constraints, whether it's those factories in Vietnam being shut or the congestion at ports. And that was really hitting their margins, and that has really been the key buzzword in this earnings seasons. But of course, you had the likes of Home Depot, Lowe's, and even the department store Macy's, those being able to weather those supply chain issues a lot better, and so those performed a lot better after those earnings too.
Ritika, thank you very much. Ritika Gupta with the broad themes around Black Friday and also how the retailers have been doing, as we've heard from them recently. Let's continue this conversation. We're joined now by Anita Balchandani, who is McKinsey & Co. partner and tracks this sector really closely. Anita, really good to speak to you. Do we have a bit of a sort of problem with the concept of Black Friday this year? It's sort of designed to get bargains and deals and money off. And actually, a lot of people this year have been prepared to pay up for availability and actually getting your hands on the things you really want. That's more the problem at this point.
No, that's exactly right. And this is a very different and unique Black Friday. And there are a few things that make it unique. One, holiday spend has been pulled forward. So our research suggests that 50% of consumers had conducted almost half of their holiday shopping in October.
Okay, I'm late.
So absolutely. So it's clearly happened earlier, and that's driven really by supply chain challenges, the concerns around availability, shipping and fulfillment promise. Also, quite frankly, due to uncertainties around COVID-19 and how it might play back through the rest of the year. But finally, there's also been, in some consumer segments, actually a huge amount of excitement looking forward to celebrating the holiday season with friends and family. So all of that has meant that Black Friday has come earlier in a sense.
Okay.
But also combined with that, you're exactly right, we're seeing promotional intensity. So number of items on sale across the globe reduced compared to historical years. And the level of discounts, particularly in US and China, where the recovery post the pandemic has probably been most buoyant, are definitely at the lowest levels that we've seen.
And Anita, we've spent a lot of this program thinking about the new variant of COVID-19, first discovered in Southern Africa and now being examined by the World Health Organization. This is coming a little late in the day for consumers in the United States or globally, because these Black Friday deals do to some extent spread to other parts of the world, of course, and certainly here in the UK. Does that come too late to influence consumers' thinking, and will it continue to influence their thinking as we get closer to Christmas, maybe, and the holidays, maybe suggesting I'm not going to spend as much because I don't really know what's going to happen next year?
So look, so far what we've been seeing is, on the one hand, it's definitely an omni-channel Christmas, right? So social media has become the new shopping window. We're also seeing that online participation continuing to hold at the levels that we saw last year, combined with so far the trajectory has been for traffic to stores to also be on the rise. Now, clearly, variants and concerns around safety may change a bit of the picture around that, and we could therefore see a more intense shift back to online. But the reality is, so far, we were certainly looking at discretionary spending and holiday spending being up versus both 2019 and 2020, and on a trajectory there where online and stores were progressing well.
Where does it take us into 2022 in terms of the consumer strength and that continued demand? Does it hold up, do you think, given what you're seeing?
Look, what we're also seeing is that recovery is very uneven. And it varies by age segment, it varies by geography, and also levels of income. And so I think all of that is pointing towards an uneven recovery. However, what we're also seeing is fatigue in consumers who have actually been, held back on travel and many other forms of entertainment. So we have seen, the pent-up demand, also to some extent fueled by some of the savings that we entered this year with, that consumers entered this year with. So I think that's also resulting in consumers wanting to channel some of their spend into retail.
How much agility have you seen from retailers in terms of trying to match that demand? We know, of course, all those supply chain constraints. Many have been planning since late summer, we hear. And does it lead to structural changes within that ecosystem longer term?
Absolutely. Look, first and foremost, availability has been a key battleground, because what we see is consumers aren't willing to wait for items that are out of stock, and they're switching brands and retailers. So we've seen retailers and brands really up their game in terms of flexibility of supply chain, lead times, and really also how they think about buying in for bestsellers and so on. So we've seen a lot of agility on that front. Retailers have also aggressively ramped up online, digital, omni-channel capabilities, the ability to fulfill and ship from stores, and all of these, effectively initiatives which came about at the start of lockdowns, we believe mean that retailers and brands are better prepared to really deal and anticipate with some of these uncertainties.
There does seem to have been a step change, doesn't there? Certainly in some of the old bricks and mortar businesses, in the way that they can accommodate and play into the online channels these days. Let me ask you about the European experience here, because clearly, Black Friday started as quite a US phenomenon, but it has spread over to Europe. Is it a big deal in Europe these days? I mean, accepted all of the ways that it is different this year from other years. How is it doing as a concept?
So actually, Black Friday has caught on in Europe, if you look at just proportion of customers that intend to shop Black Friday, etc. What we're also seeing is it's the only region where the intensity of promotional discounts is actually up. Likely because actually, if we look at the consumer recovery across US, China, the UK, and Europe, probably Europe is lagging to some extent. So I think we're also definitely looking at, Europe participating in Black Friday.
Okay, Anita, thank you very much. Thanks for joining us. Anita Balchanzani, McKinsey & Co partner, to talk us through the latest on this year's Black Friday experience. And coming up later today, more on Black Friday with the CEO of Overstock.com. He'll be speaking to the team. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso, a las 8 de la noche en una guarnición de Bogotá, Nos reunimos con los oficiales de inteligencia de la policía. Nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think we'll end up being on the right side of history as well.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back. This is Bloomberg Surveillance Early Edition. We're bringing you live images from a press conference, United Nations press conference taking place. The World Health Organization spokesman just speaking this morning and saying it's outstanding, talking about this new variant of COVID-19 that first emerged in Southern Africa, saying it's outstanding how fast this variant has been identified. Giving us this new information, the variant was first identified on November the 11th, so it's now the 26th. We can see how quickly that has happened. The WHO panel, WHO panel will be considering whether, as it's known now, B11529 is a variant of concern. So they'll be looking to decide whether to give it that label, Tom. And of course, that then adds to our concern around it, I suppose. At the moment, there are a lot of things we simply don't know. And the World Health Organization has said that it will be examining and coming back. It'll take a few weeks, I think they said earlier on. But these markets are not waiting a few weeks, are they, to look on the gloomy side?
That's right.
By 2.9% on Stock 600.
Yeah, the WHO says they're going to give governments guidance. Governments are already acting, of course, in terms of the travel curves. You're seeing that play out in terms of the travel and leisure sector, very heavily hit. But there's blood across the board here, particularly when it comes to equities. As they are saying, Anna, down 3% on your Stock 600, almost 3%. And in terms of the moves to safe havens, the euro is bid, the yen is bid, the Swissy is bid, gold is up as well, and US Treasuries yields down across the belly of the curve.
Yeah, absolutely. And some of the sector breakdowns don't come as much of a surprise. We're seeing money going into some of those stay-at-home stocks. We talked earlier about the food delivery businesses that have been doing pretty well in today's session, but they really are standouts away from the trend, because the trend is very much to the downside. And to the downside, we have those travel and leisure stocks. We also have banks, though. That's also worth bearing in mind. We have the banking sector doing pretty badly today. In fact, the worst performing sector here in Europe is around the banking sector. So that's the sector breakdown. In terms of other flight to safety, Tom, we've seen money going into bond markets, going into the German Bund. We've seen money going into FX, moving around in FX into some of those perceived havens, like the Japanese yen, like the Swissy, but also the euro. And we talked earlier with our colleague Eddie van der Veld how that's not a typical reaction. We're not seeing a dollar bid here. The dollar is actually down. The Bloomberg dollar index down a 1/10%. The DXY down 0.5%.
And of course, the implications for the central banks. That's the link there is the money markets are now starting to pull back their bets for rate hikes.
And perhaps reflects positioning. If the market's a very long dollar, you often sell what you can sell, not exactly what you intended to. Certainly, we've seen that with gold in other instances of risk off. We're not seeing that today, though. The gold price still 1,800. So we are seeing that acting as something of a haven, up about 1.2% compared to the previous close. Oil price is weaker.
Oil prices taken an absolute battering. They look past that release of reserves, now down around 3% in terms of what you're seeing with WTI. 5%, I should say. 5% for Brent, 6.5% for WTI. So massive squeeze there across the oil space. Another place where it's not proving a haven is cryptocurrencies. Bitcoin down 7.5%, Anna.
Okay, so that's another one to add to the mix. Now, we will, of course, continue to be across this story. The market response to the announcement of another virus variant, first discovered in Southern Africa. We don't have a name for it. We don't have a Greek letter for you just yet, but it seems as if the World Health Organization is looking into all of this, and we wait perhaps a couple of weeks to find out the details of what they know. More surveillance is ahead. This is Bloomberg.
the common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector. In Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The economy, by many accounts, has fully round-tripped back to full capacity.
Markets do ultimately prevail, and the supply-demand balances prevail.
I don't think the forces that have led to inflation are disappearing.
It's hard to slow the economy to just the right level.
The Fed's going to have to make some hard decisions based on data that's not perfect.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It's revenge of a pandemic that just won't go away from New York City and London. For audience worldwide, good morning. This is Bloomberg Surveillance. Tom Keene, Jonathan Farrow, Lisa Abramowitz, Tom and John are both off. They are both off together. That is suspicious. I suspect they could be in Capri. Luckily, we do have Kaylee Lyons and Anna Edwards joining us this hour, next hour, the hour after, on a morning that is dramatic. This was supposed to be a sleepy day, Anna. It is not a sleepy day, and a lot of it has been centered in Europe.
Yeah, absolutely. Welcome back from Thanksgiving, ladies. And we interrupt your Thanksgiving to bring you news of another variant from Southern Africa. That is what the markets are dealing with, and dealing with it in some style. European equity markets really moving to the downside then, Kaylee, as we've been charting through the last hour of our program. We're seeing real weakness, and weakness in the places you'd expect. Travel and leisure stocks responding because, of course, of these lockdowns, these bans on flights we're seeing from Southern Africa. But it really does go further than that. It really does go further than that. We're seeing response in the banking sector, for example. We'll get to some of those market moves then.
Yeah, and Kaylee, I gotta say, coming in, some of the responses seem logical, some not as much. I mean, why is it all of a sudden that everyone's bringing forward the idea of the Federal Reserve perhaps being on hold for longer than previously expected?
I think it raises a question of, was the pulling forward of expectations for Fed liftoff overdone? And now people are taking a chance to unwind that. It really is a lot of uncertainty, and it's quite a week we've had. We're coming off of a truckload of economic data that we got on Wednesday before the holiday that showed the pricing pressures evident in this economy, reinforce the idea of the Fed tightening more quickly. But does a variant like this give the Fed cover to move more slowly? And maybe that's what the market has to reevaluate here.
And just to give you some headlines of the latest, the WHO spokesman says the variant was first identified on November 11th, also saying that it is outstanding how fast the variant was identified. This really speaks to the speed of which people are trying to get on top of this, identify it, get booster shots. And looking forward, when you look at the travel restrictions in Europe, how much of the moves in the travel sector seem logical versus a knee-jerk reaction to a very different circumstance than back in March 2020?
Well, yes, although I suppose for this kind of business, this is one of the sectors that really can't adapt quite so much, isn't it? I mean, it's if you're a retailer, you might not sell bricks and mortar, but you can ramp up your online offering and you can try and cope that way around. And that's how some economies maybe are more cushioned from these kinds of experiences than they were at the beginning of this pandemic. But if you're a travel and leisure business and you do cruise lines, you do cruises around the world, and fewer people are going to want to get into those cruise ships or onto those planes, then that's where you have the problems. We're just getting some lines out from the UK as well, and this is where we're going to go with this now, is how far has this already spread? Because we still wait to find out a lot of crucial details, as you said, from the WHO, a lot of uncertainty, just how transmittable is it, and a lot of things we don't know about how it interacts with the vaccine. But we're going to start to get into a conversation about where is this virus already, because we've seen authorities put up these barriers to travel, but the UK saying, coming out this morning saying they haven't detected any cases of the new COVID variant in the UK, but if it's in Hong Kong, and if it's in Israel, and it's in a number of countries, 6 countries in Southern Africa, it must be in other places as well.
Let's run you through the data here in the United States. Everyone's waiting for the open. I love a story on the Bloomberg basically saying everyone's on tenterhooks, traders rushing to get back into the office post Thanksgiving. People hoping for a sleepy moment where everyone was just talking about shopping. Not so much. You could see S&P tumbling nearly 2% on 1.8%, 46.14. The euro actually strengthening versus the dollar, which I find interesting. 10-year yield, I mean, this to me, again, speaks to this question of uncertainty of the Fed response, uncertainty of inflation, tumbling 11 basis points, 1.52%. You're seeing a commensurate move in the 2-year, this idea that perhaps oil prices coming off, and you are seeing them plunge the most since July. It does raise a question. I know, Anna, you're going to run through the European numbers, but it does raise a question of how much it will take for central bankers to move away from expectations that have wildly gotten for a more tightening cycle.
Right, absolutely. And the European question here was already more complicated because the Delta variant was back with a vengeance, and we were already dealing with, ahead of today, new lockdowns coming through in Austria. The possibility of that in Germany is still there. The possibility of that in Belgium. We could hear more about that later on today. So that's the background story was already looking complicated for European monetary authorities. And now you add in this extra complexity. To take you through the numbers in Europe then, the stock 600 down by 2.7%, getting out of stocks, getting into the perceived haven of the bond markets, the 10-year German Bund, of course, and also other peripheral bond products also. Getting a little more exposure to gold, up by 1.2% on the gold price, 1,810 a troy ounce. It was interesting, actually, to see that we saw gold respond this way, Lisa, I suppose, is interesting in itself. There's some things that are a little complex about what's going on. The fact you've pointed out, the fact that we're seeing dollar selling and euro buying. It makes sense that gold would be bid today because it is seen as a haven. But in the early days of the pandemic, there were definitely times where there was gold selling because people were selling what they could and not necessarily what they wanted to.
Yeah, it doesn't exactly feel like the same kind of liquidity crunch as in March 2020. Let's get right to it. For decades, Mark Chandler's been in the market. He's been watching all of the swings in currencies and beyond. There's no one better, frankly, to understand or lack of understanding right now in markets in certain terms of the macro implications. Mark Chandler, Chief Market Strategist at Bannockburn, joining us now. Mark, what's your first take on what's going on in markets this morning?
Yeah, Lisa, thanks a lot. You know, this is a very troubling situation. You know, the pandemic really wasn't over yet. We've seen cases in the U.S. be rising. Europe, Germany is reporting record cases even before this new variant. And so we're in a tricky situation. And I think that, to your point, I do think that part of the reaction to the foreign exchange market is really not so much a flight to safety, which is the euro, the Swiss franc, and the Japanese yen all gaining against the U.S. dollar. I think what's really driving this is that these currencies are used to fund other purchases, like equities. So as the equities and emerging markets go south, people have to buy back those funding currencies. And so that's why we've really seen, you know, earlier, the dollar yen had been trading above 115.50, a multi-year high.
Yeah.
And as this news broke, you can see what happened with dollar yen, a complete reversal. And I think that as the market's funneling through this, I think that the market's right to assume that that may affect Fed policy. And remember where we were going. The market had been anticipating the Fed to taper quicker, to allow it the possibility to raise rates in the first part, say, call it Q2 of next year. And this potentially has to, you know, it just boosts the chances that the market has to reconsider this. And this is why I think we're seeing a huge rally, 7 basis point decline in the June Fed funds futures, 14 basis points in next December's Fed funds. So, the market's not taking all the tightening out.
It's interesting.
Anticipate.
It's interesting timing because just yesterday, Goldman Sachs and Jan Hatzius over there put out a note saying that the Fed is going to taper at twice the rate and it's going to lift off in June. Do you think that move would be too early, given, as you say, the pandemic is far from over?
Yeah, I had been in that camp since I saw that first CPI print on November 10th when we were above 6%. I thought the Federal Reserve would have to speed up, probably double the pace of tapering. But I too think that we need to have better clarification, and we'll get that in the next couple of weeks, I imagine, with this new variant. And so I think that the market is right to pull back a little bit, but it's cautious. It's saying that we want to have more evidence. It shouldn't be 100% chance of something taking place anymore. And I think that the market is just pulling back a bit, waiting for these developments now. This is a big shock, I think, to the market because I think a lot of people were looking beyond the virus. I think a bit too early. But I think that we were looking beyond the virus, talking about record earnings, talking about reopening up economies. And I think this has just been the shock that the market has to deal with.
And is there a danger, though, Mark, that these responses in markets are overdone, given the lack of certainty? I mean, you've got to join a lot of dots together to come to a point where you discover a new variant of a virus in southern Africa, and it means that the Fed doesn't tighten policy as quickly as the markets had expected. And some of those joining of the dots might not come to pass. I mean, are we a little premature in this thinking?
Yeah, you raise it's an interesting angle, right? That we don't live in a world of definites, of absolutes. It's really a probabilistic world. And that's what I would look at, how to anticipate or how to interpret what's in the Fed funds futures market or the Eurodollar futures market. What are the odds being priced in? And the market's just shying those odds from being sort of in the direction that Goldman Sachs and myself was looking at earlier. And the market's just saying that the odds are not quite as great. Yeah. I do think there's a lot of, like you say, there's a lot of conditionality in all this. But I think the important thing is that we've known for a long time that we cannot be safe until there's like herd immunity gotten through the vaccine. And I think that, even in the United States, we're looking at a less than 60% vaccination rate.
Yeah.
Some countries in Europe have a higher vaccination rate as a whole, but huge pockets like in Lower Saxony in Germany has a lower vaccination rate than we do in the US. And so it's these pockets that now become more vulnerable. And as we don't address it, it looks to me, and I'm not no scientist about this, but from what I understand, the virus mutates, and until we can protect everybody, nobody is really protected.
Yeah. Mark Chandler, thank you so much for being with us on this post-Thanksgiving data dump. And this, frankly, the idea of such roiling. Mark Chandler of Bannockburn, thank you. I want to go to Kaylee, what you were saying, this idea of Goldman Sachs' call. It seems like terrible timing, where basically they've said that it was very likely that the Fed would accelerate their taper, end at some point, perhaps in March, and then have 2 or 3 rate hikes next year. How much of a difference a day can make?
Thanksgiving Day can make quite a difference, apparently, Lisa. But it's interesting because obviously Goldman published that note after the data we got on Wednesday, which was PCE deflator, the Fed's preferred inflation gauge, showed the pricing pressures evident in the economy. And yet at the same time, you can have something like this, the virus rearing its head again, that people call into question. It really underscores the Fed's dilemma here because, yes, you have to maybe deal with this higher inflation, but you still have to consider that the labor market is not back to where the Fed wants it to be. And there is some concern about growth out there.
Meanwhile, you do have officials out of the United Kingdom saying there is a high degree of uncertainty regarding the new COVID variant. This is really the key here. We don't understand how much it can evade the natural immunity from prior infection, as well as the immunity inferred upon people from the vaccines. This is what a lot of people are looking at right now. What we are looking at in markets is a very risk-off feel. At one point, the Stoxx 50 off the most since March 2020. This is Bloomberg Surveillance.
With the First Fed News, I'm Ritika Gupta. Oil is falling today as a new COVID-19 strain raises concerns about the outlook for demand. The drop comes ahead of a key OPEC Plus meeting to decide production policy for January. The group has been under pressure from the US and other consuming nations who tapped strategic stockpiles to tame those rising energy prices this week. And the list of countries banning flights from South Africa and 5 neighboring countries is growing over worries about a new COVID-19 variant. The UK is placing the 6 nations on its red list, requiring travelers to quarantine in hotels upon arrival. Scientists are still trying to determine whether the new variant is more transmissible or more lethal than previous ones. Meanwhile, Hong Kong has confirmed it's found 2 cases of the new variant in travelers who arrived in the city. And China is said to have asked Didi Global to delist from US bourses over security fears. Our sources say tech regulators want the ride-hailers management to take the company off the New York Stock Exchange because of concerns about leaking sensitive data. We're told Didi's been ordered to work out precise details for the delisting, with privatization or a Hong Kong share float both under consideration. And in Russia, those close to the Kremlin say President Vladimir Putin doesn't want to start another war in Ukraine, but would fight if necessary in order to stop the creeping expansion of NATO there. People close to the leadership say the Kremlin knows any attempt to occupy large amounts of Ukrainian territory military would face widespread public opposition and trigger potentially crippling sanctions from the West. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Up front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
we've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
story. How are you thinking about those dynamics?
Nobody has an answer as to whether there will be newer variants, particularly in a context where vaccines are not universally available, particularly on the African continent, but elsewhere as well. So the vaccine divide has a major impact on these issues as we go on, and how long this pandemic will last.
That was Pravin Gordhan, South Africa Minister for Public Enterprises, talking about the new variant. Does not yet have a Greek letter attached to it, but it is roiling markets right now as people question how severe it is and how much it can evade some of the natural immunity from having the infection, as well as from the pharmaceuticals. What we are looking at right now is red across the board, very much risk-off, typical risk-off kind of trade. S&P futures down. They're off their earlier lows, down 1.6%, 46.21. The euro gaining actually a touch versus the dollar. Of course, this is after it hit the lowest in more than a year over on the pre-Thanksgiving holiday. I was going to say last week because that's what it feels like. It feels like a lifetime ago. 10-year yields coming in dramatically, 11 basis points. And the dramatic move is throughout the curve, particularly on the front end as people retrace some of their expectations for a rate hike. And a lot of this, honestly, is driven by the tumble in crude values, down 6.7% to $73.14 on the NYMEX. The idea here of potentially less travel, especially as new travel bans get implemented. What we are getting over in Europe is Sajid Javid, the Secretary of State for Health and Social Care for the United Kingdom, coming out and saying that the United Kingdom will change COVID rules if required. But right now, they're sticking with the pandemic plan, still talking about how much uncertainty there is around this new variant, and then also emphasizing vaccinations. When it comes to vaccines, there is no one who understands them better than Sam Fazeli. We are so lucky to have him here with us at Bloomberg Intelligence Director of Research, really focused on the pharmaceutical company. What we are seeing is a huge surge in the shares of Pfizer and Moderna as people question what this means in terms of additional pharmaceutical remedies. You can see Pfizer up more than 5%, Moderna surging in excess of 8% pre-market. What's your view on how serious this new variant is, Sam?
Yeah, hi, and thanks for having me on. So I think if you look at the various mutations that this variant has, it is what is worrying most people. It is in all the areas that you wish you didn't see mutations in, which are to do with the way it binds to human cells, the way it interacts with antibodies, be it a vaccine-induced antibody or therapeutic antibodies or preventive antibodies that we get from Eli Lilly and Regeneron and the likes. So that's where I think the worry comes from. And also it's got the same mutations in other areas which have been associated with better infectivity and fitness and ability to evade immune system. So all of that is what's worrying the scientific community.
How quickly can the scientific community respond to this with potentially boosters, with potentially tweaked antivirals? What's your sense?
Yeah, I think tweaked antivirals are much tougher to work on, and there's no reason to think at the minute that the antivirals that have been developed by Merck and Pfizer will not work against this variant, but time will tell, and we do need studies to prove it. There's only one mutation in the area to which, for instance, the Pfizer drug or with which the Pfizer drug interacts. So that's hopefully means that it will continue to work. As far as the vaccines, the number that's been banded out there with regards to the mRNA vaccines from Pfizer-BioNTech and Moderna is about 100 days to go from a new sequence to a vaccine ready to be tested. Then, of course, the world needs to figure out how much testing they want to do on those new variant vaccines, which will probably add another 2 or 3 months.
What do we know, Sam, about how transmissible this virus is? Because, of course, you care how quickly it spreads. You care how severe it is, and we don't know much about that. But we do have some early information around transmission. What can you tell us there? I'm looking at some data coming out of the Johannesburg area, which suggests that 90% of the cases reported on Wednesday in a particular province that includes Johannesburg, were caused by this new variant. But you've made the point to me before that, does that tell you anything about, I mean, what was that going directly up against Delta, and that's what we don't know?
Yeah, so Anna, we just have to wait and see, because the data is so fresh and the case counts are quite low still in South Africa relative to the sort of per capita case counts that we have in Europe. So it is possible that a lot of this is just driven by a super spreader event or a founder event, which is what their effect, which is what it's called in the world of virology. So that is possible. But it's also possible that it becomes that it's more transmissible than Delta. We have to wait. You just can't rush these data and these analysis.
Sam, Anna and I were speaking to a molecular epidemiologist earlier on Surveillance Early Edition, who basically said that this, to a large extent, was inevitable, given the fact that the vaccination rate in places like Africa remains so much lower than that of the West, and it just gives the virus more room to mutate. Is this just going to continue to happen repeatedly until the vaccination rate is higher?
That is a hypothesis that is absolutely solid, and I wouldn't argue with that. But it appears it is possible that this kind of level of mutational rates has happened in immunocompromised subjects, which would not respond to vaccines that well anyway. So if you have an HIV patient, and of course South Africa unfortunately does have a heavy burden that it suffers from HIV, those subjects can have a very long duration infection, which allows the virus to experiment a lot. Completely mindless, but it experiments and it finds all these mutations. That is more likely to be the explanation, but we cannot ignore the fact that we need more vaccines in Africa.
Sam, we're running out of time, but just real quick here, when can we be done with the coronavirus? I mean, is there a time when we can move out of pandemic era?
Yeah, I mean, look, we've tried people have tried to call this an end to it and just move on, etc. This virus is new. It's trying out all kinds of mutational space that it's got to try and see. I mean, there's no intelligence in it, where it can go. I think we still have some more time to go here.
That's not what I want to hear. Sam Fazeli of Bloomberg Intelligence, we appreciate your insights. I hope that you're wrong. I hope we get rid of it by next year. I got to say, Kaylee, the idea of trying to be more patient and waiting for people to gather is not what people want to hear, which is the reason why they are certainly ignoring it and going together in big stadiums. I think about Michigan and Detroit and how there still are big events being held, even though the case numbers are just absolutely surging.
Well, that's the case here in the U.S., Lisa. It's a very different story in parts of Europe where you actually are seeing restrictions being put back into place, places going back into lockdown kind of measures. I'm not sure that there's a political appetite for that here in the U.S. So even though surges may be coming in fits and starts, it's really about the policy response. And on the policy side, I feel like things may stay loose here.
Well, and Anna, that sort of speaks to what we were hearing from the health minister over in the United Kingdom, the idea of perhaps not just having a knee-jerk reaction to re-implement curbs.
Yes, I mean, we have in the UK blocked travel or changed the travel status for people coming from those southern African countries. So there has been that response. That was the sort of knee-jerk response. But you're right, no stepping up of the COVID sort of alert levels. Though it was the Delta variant that basically cancelled Christmas in the UK last year. We'll see if this one does the trick this time around. I hope not, Lisa.
Man, such a cheery Friday morning post-Thanksgiving. Everyone should be out there shopping. We're talking about how never, ever is this pandemic going to go away, at least not for the next couple of years. Yet there we are. We are seeing S&P down at 1.6%, 46.21 as everyone gets back to work. This is Bloomberg Surveillance.
think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has 3 very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one-directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
This is Bloomberg Surveillance. John Farrow, Tom Keene, both off. I'm very lucky to have Kayleigh Lyons and Anna Edwards in the seat with me today as we really deal with a day that should have been boring. We would like it to be boring. It is not boring. It is decidedly risk-off. It is decidedly the recurrence of concerns about the potential resurgence of a new variation on the coronavirus. We don't know that much about it. This is the issue. We don't know how quickly it spreads. We don't know how much it can evade the immunity that's inferred by vaccines, by prior infection. But what we do know is that when you take a look at the biology of the virus, you can see that it has the markers of potentially being different enough from the prior iterations of this virus that it may have some of those characteristics. In response, you're seeing S&P futures down 1.7%, 46.18. You're seeing the euro strengthen, which is sort of the odd move out. You're seeing the yen actually surge the most going back to 2020. 10-year yields, I mean, this to me, you're seeing the move just deepen. Yields going lower, price higher. The flight to safety very much on 12 basis points lower on the 10-year. You're seeing 2-year yields also tumble. This to me is really notable. 15 basis point move downward. 2-year yields now 0.49% as people rethink and some of those rate hike expectations, how much difference one day makes, with Goldman Sachs yesterday bringing forward their expectations for rate hikes, bringing forward their expectations for a taper, an accelerated taper by the Federal Reserve, suddenly shattered, at least in market expectations today in the United States.
Yeah, absolutely. And you'd think, as we were talking about with Mark Chandler earlier on, you'd think that we would have to join a lot of dots to get from a new virus variant to really so quickly changing our thinking on when the Fed is going to move on interest rates. But as he was pointing out to us, we live in a probabilistic world, and that is what people are playing with here. That probabilistic world means we're risk off in Europe as well, then, Lisa, down by 2.5%. A move into bond markets, that's what all that green around the German 10-year and the Italian BTP, that's what all of that means, of course. We're going to that perceived safe haven of the bond space. Gold spot up by 1.4%, also acting as a haven. As you point out, that euro move maybe stands out as being a little bit strange. We are seeing 0.75% higher on the euro. Maybe it reflects positioning, as Mark was pointing out earlier on. Maybe it's buying back of some of those funding currencies, adding to the readjustments that markets are having to go through today.
Yeah, and of course I do wonder, Anna and Kayleigh, how much this ends up being just a thin market story, as we do have traders that we hear are rushing back to the office to try to deal with actual news. What we should have been doing, what we should have been talking about is shopping, because that's what happens on Black Friday. Today is Black Friday. We are going to talk about shopping, and it is relevant to the entire picture. Joe Feldman joining us. We are so lucky to have you, Senior Research Analyst and Assistant Director of Research at Telsey. Joe, when we look at the shopping scenario, just tying it into the news of the morning, how much have we seen a return to stores, and how much are people now accustomed to shopping online? It is safer, it is easier, it is the way that people are going.
Well, for the few stores that were open this morning at 5 a.m., I think the online was still very prevalent because there was not a mad rush to get into the stores. It does seem like people are shopping more online these days. And I think that that's going to be the case. If you really wanted to get something, you could get it in advance. I assume there'll be quite a bit of store pickup today. People probably did some shopping yesterday online that they want to pick up in the stores. But we're hearing that this weekend should be a pretty good weekend from a footfall perspective, as people do want to actually get back into the stores. You know, I know that the new variant of COVID is a little scary so far. We haven't heard of it here in the U.S. So I don't think it's going to impact this weekend per se, but it could have an impact as you get deeper into the holiday season in terms of the store versus online.
Joe, there has been a shift also, though, not just in where people shop, but when they shop. And Black Friday used to be the time when everybody would go to the stores. But what we're seeing is actually less shopping than previously expected online heading into the Black Friday holiday. This isn't because people aren't buying a lot of stuff. They are. It is because they've spread it out over more time. How much is that becoming the new normal?
Yeah, we think that is the new normal, the spread through the holiday season, which is why it makes it very difficult for analysts like myself to go into a store today and then try to make some assessment. Oh, it was a good Black Friday, a bad Black Friday. So much is online, so much was pulled forward earlier, so a lot's going to happen after. I do think this year, the one big difference, though, is because the inventory is so tight and the supply chain constraints are there, people are buying earlier for sure if they want to get something.
Well, and to that point, Joe, inventory is really tight. There's not necessarily all the goods that people want to buy available. So does that mean that you aren't going to get your traditional big bargain Black Friday discounts?
You know, that's a terrific observation because the truth is you're really not getting what you've seen in years past. Last year was okay. People a little, you know, more focused on full price. This year, same thing. We're seeing a lot more pricing closer to the full price. So in other words, the discounts aren't as steep. We're seeing anywhere 20 to 30% for most stores. Some will be deeper. I think I saw some signs on the Gap today for around 40% off, but generally speaking, there weren't many, you know, deals to be had that were just screaming at you this morning, at least the few stores that I saw, that you had to rush in to get it.
Well, you mentioned Gap there, which of course reported results earlier this week, and it flagged inventory as a problem because of all the supply chain issues that retailers are dealing with. Do you expect that some retailers just simply will not have the inventory this holiday season?
I do think that there are some that will be very tight. You know, for the most part, we got through this third quarter earnings season, and the inventory position for most retailers was actually pretty good. It was better than a lot of us expected. Still not great where you'd like it to be heading into the holiday season, but there is this fear that there may not be that second wave of inventory coming in. So it could be pretty tight as you get deeper into the season. But I think that we are going to see some pressure through on the inventory. But again, it will mean prices will be closer to full price as opposed to steep discounts.
Joe, I'm already running behind. I still owe somebody in my family a gift from last holiday that still hasn't shown up, so I'm already in trouble. But in terms of availability, I mean, is it really the sticker prices that, you know, the big discounts that are going to get people through the door this time around, or is it really about the availability? You know, I mean, if I knew that a certain store had plenty of a thing that's very popular in stock, might that be the thing that this year actually gets me to show up in person on the doorstep, rather than the prices? Consumers have shown that they're prepared to pay up for the stuff they want. It's getting their hands on it that's difficult.
Yeah, I think that's a great observation because you are going to see people will want to get the item that they want. And, you know, we're seeing that they will go to the store if need be to get that item. I don't think it's the discount that's going to drive it right now. I really do think it is much more item driven, that you're going to see people wanting that special toy or electronics item. And whatever is particularly popular, it really has been tough to get. And so people will go wherever they need to get it to satisfy that demand.
Yeah, and are retailers falling into two camps then for you, Joe? The ones that have the pricing power and the ones that operate in a field where they really don't? Is that what you're seeing?
We do believe that, you know, and those with the inventory and the pricing power are really likely to be the big winners. I mean, Walmart, Target, the Costco's, Amazon. We think those are going to be some of the big winners this holiday season, just given that they do have inventory, they've got the best pricing, and they really have the broad base of items across the categories that people would want to shop for. So we're pretty optimistic about those guys heading into the season.
Joe, if we do see a resurgence in new cases of COVID, I hate that I'm saying this, but if we see this new variant actually take hold and start to create a prolonged feeling of the pandemic, again, I hate that I'm saying this, do you expect there to be an additional consolidation among the biggest players here because of their supply chain power, because of their ability to negotiate independently with particular suppliers, with particular nations?
We think we're already starting to see it, where the market share gains for some of those big box guys, the Walmarts and Targets of the world, Costco's, where they were able to get the products that they need. They were able to negotiate with their shipping partners, and in some cases do it on their own. And so I think you're absolutely right that they're getting what they need. They're consolidating that inventory. They also have the best prices out there, so they can be really competitive in this environment. I think it's been really much more challenging for some of the smaller retailers to deal with this environment. And if there is another flare-up in the pandemic here in the U.S., fourth wave or something, I would think we're going to see similar type of behaviors. And that's part of why we've seen Walmart and Target, even the grocers, are holding up a lot better than people thought they would have at this point. I think we all thought there would have been much bigger reversion to the mean, so to speak. And it really hasn't been. We've just elevated the level of sales, and we're growing on top of that.
Joe Feldman, thank you so much for being with us of Telsey. What we are seeing right now is Amazon down a lot less than other shares, down just 0.3% in pre-market trading, even though you're seeing the NASDAQ down more than 1%. You're also seeing, in terms of smaller companies and how much they're getting crushed, the Russell 2000 futures down almost 4%. Huge crushing as people take a look at the prospects for smaller companies. Kaylee, we also are seeing, and this has really been what I've noticed, is a complete retracement in a lot of the expectations in the bond market.
Yeah, a lot of expectations in particular when it comes to Fed policy, because those bets on when Fed liftoff would happen had been pulled forward to mid next year. And now those are reversing, going in entirely another direction. Now liftoff has been pushed back from June to later on in the year. And now actually the second 25 basis point that initially the market thought would come in 2022 has now been pushed out into 2023. So it's really been a reversal from what we were seeing just earlier this week.
And I gotta say, there's also a question of the unreliable boyfriend, Anna. The idea of the Bank of England coming in here, already disappointing markets, then saying basically all the conditions are basically the same for a rate hike in December. And yet here we are. Could they potentially follow what the market is expecting in the United States and say, okay, now this isn't another slew of uncertainty, we'll hold off?
Yeah, I mean, life just got a whole lot more complicated, didn't it? We have heard just this week from the Governor, Andrew Bailey, and he was really emphasizing, of course he emphasizes the inflation threat and, we'll act if we need to, but he was emphasizing the downside risks to growth, and another virus variant that complicated the UK fight against COVID-19 could certainly be something to watch. You mentioned the moves we were seeing in Amazon there, Lisa. We also see that reflected here in Europe. So all of those stay-at-home plays, food delivery businesses, they are doing pretty well compared to the rest of the market here in Europe.
Yeah, and if you take a look at Zoom video communications, I mean, this to me highlights everything. It's up more than 9%. I guess everyone's recommitted to Zooming for the rest of their lives. Let's hope that's not the case, just because it is nice to see people in person. Coming up, we'll get more detail when it comes to the virus. We're so lucky to have Andrew Pekosh, the expert in virology from Johns Hopkins University Bloomberg School of Public Health. From New York and from London, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. Global health officials say it could take several weeks to determine just how dangerous a new coronavirus variant is. Advisors to the World Health Organization are holding a special meeting today to discuss the new variant, which they say was first identified November the 11th. The variant that has caused stock markets to swoon and led the European Union to recommend a pause in flights to southern Africa. It's crunch time for U.S. retailers as masses of shoppers return to in-person shopping for Black Friday, but the new coronavirus variant is adding to a long list of concerns facing the retail industry, and analysts say deals are shaping up to be underwhelming. Discounts on sporting goods and appliances will be lower than last year amid tight inventories and rising inflation. Germany's new government plans to channel 60 billion euros into a fund to help finance its climate goals over the next 4 years. Bloomberg's learned the money will be earmarked via a supplementary budget from existing outlays. Olaf Scholz's new administration has made a headline pledge to zero out carbon emissions by 2045 and to end coal use by 2030. And Deutsche Bank has made a series of hires in its U.S. wealth management unit, helping its head, Arjun Nagakati, to rebuild the team as he puts increasing focus on serving the very rich. He says his plans is to limit services for clients who don't have at least $10 million to invest. He's recruited several senior executives from the competition recently, including from Bank of America and Wells Fargo. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think will end up being on the right side of history as well.